All right, guys. Sleep is good, man. Sleep is good. Thank you. All right, guys. So today we have more economic data coming out. We have jobless claims. We have the Philly Fed index. Credit Suisse got liquidated. Wow. Where's credit? Where's CS now? Okay, so CS is all the way up at 230s. What's up, Leslie? What's up, Dan? I think green today and massive dump will be on Tuesday. Yeah, so market bounced back a little bit today or yesterday. If we look at like the SPY here in the middle, market bounced back up to 388. It's kind of back and forth slow action over the last week or so. What's up, Beach? So yeah, we're gonna do a poll on all right, so does the market react positively or negatively to today's jobless claims and Philly Fed index data? I don't know. Let me know what you guys think. Vote on this poll. We can go green reaction or red reaction. And then we'll put neutral as an option here as well. Oh no, this is the Donald Duck one. There we go. No problems with your eyes? No, my eyes are okay. I don't know. Building permits is the one I don't know about. Generally, higher jobless claims is interpreted as a positive right now, but because yesterday's PPI data saw a negative reaction, even though it was better than expected, I think the results today are a little bit less sure. Uh, okay, sorry, John. I accidentally hid your messages. Sorry, John. So, John, I accidentally clicked hide your message. My bad, bro. You should be back. So, complete accident here. To be honest, it was kind of a test. Yesterday, I wanted to see if it would let me. And there were issues with moderation yesterday, but it looks like today they're back up DS. So, I just tested them out. Sorry, John, you were kind of my test there, but I appreciate you understanding. You didn't do anything wrong. I appreciate you let me test you, bro. But, jobless claims data comes out at 8:30. 8:30 is when the jobless claims stuff comes out. Let me see. Adding something up. Why is Bitcoin pumping so hard? Is it? I didn't even look at Bitcoin yet. Credit Suisse is up big today, though. That's good. Bitcoin's still sitting right around where it was yesterday, about 25K. Not really pumping up a lot right now. Yeah, I'm looking up some Credit Suisse data. It says the S&P settles lower following economic reports. I mean, the market's pretty flat right now. Uh, all right, so some good news about Credit Suisse. So the Saudi National Bank chairman, Amar al-Qadari, has chimed in to suggest that the degree of sell-off in Credit Suisse shares yesterday was, quote, unwarranted, according to CNBC. They dropped over 30% yesterday. They bounced back after reports suggested that the Swiss National Bank would step in to support them. So yeah, Credit Suisse basically survived, bounced back some, all the way up to 230s right now for Credit Suisse here. So what's up, Kieran? What's up, Kid X? All right, I got you, man. Hold on, let me find the timer. All right, so right now it is roughly 6:30 market time, or roughly 6:20. So we got 2 hours, about 8 minutes. Yeah, we got about 2 hours and 8 minutes here. There's the timer. Hey, what's up, Kieran? Is better or lower Philly Fed index? I think Philly Fed index is manufacturing, if I remember right. Let me check to be sure, but I think it's manufacturing. So the Philly Fed index measures the relative level of business conditions among manufacturers, and so over 50 or over 0 indicates improving manufacturing conditions. Below 0 indicates worsening, and so they're expecting negative 15.6. So they are expecting worsening manufacturing conditions. So if inflation is still a fear, then lower should be seen as better, I think. But I'm not 100% sure. These manufacturing indexes and PMIs and stuff like that, they're a little bit less sure of a reaction. You know, like, to be honest, yesterday we saw some interesting stuff with like PPI. Like PPI came in worse than expected, or better than expected, and the market kind of tanked yesterday. Now, luckily, the market ended up bouncing back up. You know, you can see the economic data came out here, and then very quickly rebounded back up. So that's good. So it looks like the good PPI eventually, you know, caused the market to bounce all the way back up. And that's what I was saying yesterday. Like, they had a lot of people trying to just say, oh, you're just a perma bull. And it's like, bro, who in their right mind is going to interpret lower than expected PPI is a bad thing, you know, in this period of super high inflation? It just doesn't make sense. I don't know what Bitcoin's going to do, man. Yeah, so we have the ECB rate hike decision today as well. I think it's at like 9:15. Oh man, I got a lot more sleep tonight than I did the previous night. That's for sure. What's up, David? How you doing, man? I don't think it was, Martin. I think I would have heard about it if it did. Yeah, I think the PPI data helped the market. You can see the market rebounded big, man. All right, so yeah, you can see the SPY still down a little bit in pre-market at around 388 right now, but it did bounce back yesterday. The PPI data saved the market, it looks like. All right, Pawn, it looks like everything's working well, brother. Effective Monday means that it starts Monday. It goes into effect Monday. It means that it starts on Monday. Hey, thank you so much. Don't know how to pronounce your name, brother, but I appreciate it. Crypto Trader, thank you, man. Lost 700 on Natty Gas yesterday. Made 500 off of Adobe earnings. You win some, you lose some. Yeah, for sure. I'm ready for earnings season to start again, man. It's been a while since earnings season, man. I'm ready for it to start again. I'm long about Disney. What do you think, bro? I'm in Disney too, man. I think the time to buy it was a couple days ago. My average is 91.90s. So I got in like, I don't know if I got in. I think I got in yesterday. But again, yesterday really does show like, like yesterday really does show that like the people that are always hypercritical of my trading are like a very specific type of person. You know what I mean? Like I'm bearish a lot, like to put it into perspective, I bought up some stuff, held it until a couple weeks ago prior to the Jerome Powell comments, and then sold it because I was bearish leading into those comments. And then I didn't buy anything until the last couple days when the market was all the way back down. The SPY was hitting 385s. I bought Disney and I bought Disney and Google at like freaking, I bought Disney and Google at the low 90s, both of them. I bought Disney at like 91s. I bought Google at like 92s. Google at 97 right now. And again, every time I buy these dips, every time I say, hey, I'm buying these, bears are like, oh, what a perma bull, man. They make fun of me literally every time I do it, bro. And then every time I do it, it goes in my favor with very quickly, usually. Like these two, like Amazon or Google and Disney went in my favor literally within like 20 minutes. And so you got to go fearful when others are greedy, greedy when others are fearful. It really is a thing, If all the bears are making fun of me for buying something, I know I'm doing the right thing. If all the bulls are overly optimistic, then I know selling's probably the wrong thing, or no, selling's probably the right thing in that situation. But it feels good, man. My accuracy's got to be really high at this point in time of my swing trades, man. I've been making money. So it feels good, man. I gotta brag a little bit when I have the opportunity to, I think, because it just feels good to make the money I have been in swing trading, to be honest. My swing trading, I've got to at least be running like 70% with my swing trades. My day trades have been pretty good too lately, but Snap going ham too. Yeah, Snapchat has been a big one that I've always talked about Snap as it dips. Like Snapchat starts dipping down to cheap levels. I mean, Snapchat just got a huge user base, and so it's for whatever reason you got a lot of people that just really hate Snapchat. But Snapchat's got a huge user base. It's got hundreds of millions of users daily, So it's like whenever you get that many viewers, like you're gonna be okay. If they're still that big a part of people's social media platform holdings, then they'll be fine, I think. Yeah, for sure, Raphael. That's kind of how it goes, man. All right, guys. So yeah, Snap and Meta ripping up. What's up, Network? What's up, Tesh? FRC at 24.6 is a gift. Hey, good luck, brother. Yeah, I'm a little bit of both, though. I don't think I shorted yesterday because I thought the market just wasn't favorable for shorts, but I will short if I need to, you know. So I'm a little bit of everything, man. I think to be honest, I think you have to be fluid with how you trade in markets. If you want to be green in how you trade, especially day trading. If you're day trading, especially, you got to be fluid with how you're trading. Like you got to be willing to go fluidly back and forth from green to red to short to long bias to long-term hold to short-term hold to range dip to momentum dip or whatever it is. You got to just be willing to switch back and forth. So we did a crypto show yesterday, Chris. Crypto market's interesting right now. I think the crypto market's shown to be pretty resilient despite all the volatility in the actual market. The crypto market's been interesting. Bitcoin's still sitting at 25K, over 25K, just tapped over it for a split second just now. Let's see if it actually holds. But I like the Bitcoin market right now. I think Bitcoin specifically looks good. I think there's risks in other cryptos, but I think Bitcoin is strong currently. So. All right, guys. Tesla bouncing up a little bit. SPY still around 389s. Bitcoin still popping up over 25K. Haley Hannah posted. This is actually a funny tweet. Yeah, I guess it's probably pretty similar to trading. You know, it's probably pretty similar to traders too. She said, quote, in case anyone wants to know what it's like dating a poker player, David just told me I ate 17% of his French fries. You know, yeah, I guess I could see that. Yeah, so it looks like the ban is only on government contracts. Hasn't Meta bounced back some? Yeah, Meta all the way back up at 200 plus. So Meta's been one of the strongest bounce backs in a while now. Yeah, this is TD Ameritrade though. So I mean, this is just Bitcoin futures. And so yeah, they don't have actual Bitcoin. Oh wait, did they? I think I just saw it. I mean, they have it here, but there's no zooming out. I'm just going to use the Bitcoin futures chart so I can keep all of them up. Bitcoin futures is the easiest thing to go off of. They stopped investing into the metaverse. I think that's probably a good move for now. ESPR looks kind of interesting for a long-term swing. Dropped big on a contract dispute, but analysts coming out reaffirming buy at 22 price range. Yeah, let me check. I just don't know anything about it, and it's a penny stock. And I understand the extended dip buys, because I usually take trades like that, but I'm skeptical. So it looks like they're getting mad about OpenAI. They're getting mad about OpenAI. Yeah, market. I guess the real question. Let me look at the poll numbers here. We did do a poll number here. We asked people, hey, does the market react positively or negatively to today's jobless claims and Philly Fed index data? 51% think we're going to get a green reaction to this data. 34% think we're going to get a red reaction, and 15% think we're going to react neutrally. Let's see. Do robots really deliver food to you in other places overseas? Yeah, hit the like button, guys. Yeah, the poll might be inverse, to be honest here. Does anyone actually still use Facebook? I don't really use it. I have it. I might post on it. So like the main reason I use it is to let my family see pictures of my kids. Like my grandma just passed away last year. But prior to that, she would see pictures of my kids on Facebook. My mom and dad see pictures of my kids. I don't live close to my dad, so my dad lives in another state. So yeah, so him, my stepmom, my mom, my cousins, they can all see pictures of my family. That's the main way we actually use it. All right, so here's a really interesting stat regarding the banking stuff going on right now. Banks with $373 billion in combined assets failed in 2008. So the 2008 market crash was because 25 banks with about $370 billion in assets failed. All right. Now, I want you guys to understand this difference. today or this past week in 2023, only 2 banks, but they had a combined assets of roughly $20 billion. And so even though this was only 2 banks with $320 billion in combined assets failing, it's very similar to '08, which was 25 banks with $370 billion, only $50 billion more. And so 320 versus 370 in 2008. And I don't think we're at 2008 levels. And I do think that inflation plays a factor in this. I think prices have gone up dramatically in the last 15, 20 years since '08. So why is crypto pumping so hard when banks are failing? I mean, that question answers itself, sir. It's not an excuse, TP. I mean, I'm not blaming it on anything. It's not like I need to justify using it. It's not really an excuse. It's just like, listen, people, like, I promise, bro. Listen, you got to understand how it really is, okay? Like, this is the big thing to understand. All right, it goes by how old you are. Whether you use Facebook or not, goes by how old you are. All right. So and also I think your relationship status. I think, like, if you are in your 30s like me and you're married and you've been married for a while, and so you know what I mean, I think most people in their 30s that are married are using Facebook. I think that people under 30, I think it drops pretty fast from not using Facebook to using Instagram and stuff like that. And I think there's a lot of people that still have Instagram and Facebook as well. I think it's over 30 right now, but I think it goes by age. And I think you got to understand, most people my age are using Facebook. That's the main platform that people use. But my generation, is probably the last generation that used Facebook. And so it's not really an excuse. It's just that that's what I use, man. I let my family see my pictures of my kids. I can text pictures, but texting is much more difficult. I also use Messenger a lot to send stuff. Messenger's a better texter than actual, like, sending text messages. I can send pictures much easier through Messenger. There's just a lot of benefits of using it, in my opinion. And I'm not really the biggest bull on Meta, to be honest. I think there's obvious vulnerabilities in Meta long term. I think the problems that I just stated are the same problems that Meta is going to face over the next 20 years, which is a generational issue where people in the younger generations do not use Facebook, but they do use Instagram. Feeling like the market's going to dump today. Hey, we'll see, man. Hey, what's up, Lane? FRC. Bro, I don't even know what that is. Hello, TP. Yeah, it's all good, man. I'm old too, bro. We can be old. It's all right, man. Listen, men age like fine wine, bro. That's what I'm saying. Y'all know it's true. All right. So the Federal Reserve's emergency loan program, it might inject up to $2 trillion funds into the U.S. banking system to ease the liquidity crunch, according to J.P. Morgan Chase. If that's the case, is there an argument for a dip buy? Yeah, it's cold over here, man. Honestly, it's been cold in Texas, dude. I went to the zoo yesterday. Terrible idea, bro. Terrible idea. I went to the Houston Zoo yesterday. Honestly, it was a terrible idea, bro. Everybody had the same idea. You know, the weather was nice yesterday, and so we went out to the zoo, and it was horrible. Like, that place was so packed. It literally took us like an hour and a half to park. You know, we had some zoo employee that we caught like walking out, and he was like, "Hey, y'all need a parking spot?" And we were like, "Yeah." And he was like, "Okay, I'm about to pull out." And so he was nice enough to like literally wait for us, and we got a spot finally. But we sat in traffic for like an hour. Hey, nice puppy. Yeah, yeah, for sure. I don't actually like scroll like use Facebook like that, Vom. Like if I have pictures that I want to show to my friends and family, I post it. Kind of like people use Instagram nowadays. And that's basically it. I very rarely post. Like if I want to post something, I usually just post it on my beginner trading Twitter. Like if I want to post just basic text, I just put it on Twitter. You know, uh, almost all the posts I make on Facebook are just pictures of my kids and pictures of me and my family and stuff like that. You know, vacation pictures and stuff. Uh, All right, guys. So again, is there a dip buy here? Look at Bitcoin pump, guys. Bitcoin just pumped up to 25.2 thousand right now. So Bitcoin just broke over to 25.2 thousand. What's up, Christian? Yeah, the zoo was fun, but it was just chaos, dude. We saw some cool animals. We saw like the elephants. We saw the tiger. We saw the snakes. You know, it was fun. There was like baby elephants there. They were cool. Uh, Tesla dipping down over 180s though, at almost 181s right now. And Tesla looks like it had a green day yesterday. It was mostly a choppy day. I stepped away from it, or it looks like the day wasn't green for Tesla. It was pretty flat. I stepped away pretty fast. All right, guys. SPY at 388.20. So SPY dipped down a little bit now, right over 388s. I love football. Oh, dude. Honestly, I'm still kind of bummed out, bro. I'm a Bengals fan. I'm from Louisiana, so I'm kind of just a Joe Burrow fan. But in turn, I'm a Bengals fan from that. And Joe's gotten so close, man. Every year. Last year, he lost the Super Bowl, but he made it to the Super Bowl in his first full year in football. He made it to his first full year in the NFL. He made it to the Super Bowl. Uh, and then yesterday, you know, the playoff loss hurt. Um, I don't know, man. I like football too, but like, I don't know. I think there's some suspect calls in the last Super Bowl. I think there's some like I think the last 2 minutes Chiefs holding call, the phantom holding call in the last Super Bowl really discouraged me from watching football. He barely touched him. And so people could say, oh, well, they called some games or they called some penalties for the Eagles earlier in the game, but it doesn't matter because penalties like that change the game. Like that changed the game completely. They can call whatever they want for the previous, period of time. But calling that in the last 2 minutes ended that game and made Jalen Hurts unable to make that last drive. I'm just bummed out about it. I don't know. Yeah, I'm still mad about it. Baby Burrow, that's right, man. Baby hand Burrow, All right, guys. So, yeah, I'm not really buying anything yet. I might buy some stuff up in a couple minutes if we get strong enough dips. I think there's some optimism regarding the banking sector today. I really do. I think there's some optimism today, guys. FRC is crashing down. It really is, dude. The question is it worth a dip buy here? I don't know. It's been a fun week, man. It's been a volatile week for me. Not a volatile week for me. It's been a big week for views is what I meant to say. So yeah, S&P confirms it will provide liquidity to Credit Suisse against sufficient collateral, says that within its mandate, it can provide liquidity to domestic banks against collateral. So you can see this news here. For Credit Suisse, it's got to be pretty good. Bitcoin still popping up to 25.2 thousand here. Yeah, for sure. I think there might be an argument for a little dip buy there. Yeah, for sure, pawn. It was a rough game. I'm excited for baseball season this year, though. I really am. The Padres, they've got a super team. I mean, watching a little bit of the World Baseball Classic. I'm excited for baseball this year. I like the new rules, man. I like the new rules. I like banning the shift. But I think they're going to find ways around that, and they might have to update the rule set to kind of stop it from happening. But I like banning the shift rules. I like the pitching timer. I like the larger bases. We'll save injuries. I'm excited for baseball this year. Irrespective is better than irregardless. I've never actually used irrespective. I've never used irregardless either, but I think I'm going to open a bank account at a bigger bank. I'm with Comerica. Yeah, I mean, I'm not going to say who my bank accounts are with. I don't know if that's really the right move on stream to say, but most of mine are with big banks. I got a bunch of bank accounts, to be honest, but most of mine are at big banks. Another thing I've been really genuinely thinking about doing this year is being in the World Series of Poker. It's kind of a bucket list thing for me. Like, I want to be in the World Series of Poker. So, like, part of me is really thinking, man, FRC, guys. Wow, dude. Look at FRC here. Y'all be careful, man. This looks like a dumpster fire right now. Y'all be very careful. All right, this genuinely looks like a dumpster fire. Y'all just genuinely be careful, man. Did Edwin Diaz get injured? Oh, no, man. Did he really? They get the trumpets out when he comes out, man. I like Edwin, dude. He's one of the best closers right now. He's one of the most fun closers to watch in baseball right now, man. Did he really get hurt yesterday? How bad? Did it say what it was? Not Tommy John, huh? Or he's not getting Tommy John, surgery or something like that. That's going to put him out for a long time, is he? That sucks, though, man. I'm sorry to hear that. Yeah, Todd, it'll be fun. I'm an Astros fan though, so I'll definitely be going to some games out there. But man, look at FRC right now, guys. I know we're talking baseball, but look at FRC dump down. Nah, Yankees ain't gonna win, dude. Okay, so it was a knee celebration. Oh, knee's not good as long as it's not a ACL or MCL injury. But knees are not good either. Knees and elbows are the two really bad injuries. I'm interested to see what Correa does this year too, with the crazy contract stuff that went on in the offseason for Correa. All right, guys. So market is popping up pretty fast here. So we did have FRC basically rebound from mid 18s all the way up to 22 right now. Maybe not mid 18s. It hit 1880. So high 18s to 22 plus right now for FRC. It is bouncing back very quickly. I'm looking up the news for this one so we can watch to see what happens here. It's still not even 7 a.m. yet. All right. So yeah, basically this is what's going on with FRC right now. I'll post the news. So basically, FRC is acting crazy today because it's mulling a sale potentially, is what I see. We also had Dollar General earnings and a couple other things, but yeah. That's kind of what we got going on. Yeah, FRC bouncing all the way back up quick here, all the way up to 23s now. SPY rebounding quick on the optimism in banking and everything else since then here. Back up to 399. I'm still in a little bit of Disney here, but we've mostly scaled out of Disney, but we're still in a little piece of Disney right now. But we're green on the rest for sure. Yeah, I might start adding some stuff to it. It just depends on what happens here. There's FRC up to 23s. Yeah, I'm probably not making it. Bro, don't be mad at the Astros, bro. Come on now, man. Listen, what you're really bad about is you're really just mad that your team lost to the Astros, bro. That's all it really is. Anybody that's still mad about the Astros is just mad their team lost, man. The edge that the Astros got that year was clearly not like, okay. I would understand that if the Astros weren't amazing teams. Like the Astros were all like obviously the best team in baseball this past year. They're obviously still the best. They got the best bullpen and pitching squad in the game right now, for sure, without question. Like our pitching staff, or our pitching lineup is just top notch, even without Verlander. I think Christian Javier, and I think Framber Valdez will still keep us up there, you know. Look at Tesla bounce back, though, at 181.50s here. FRC at 23. SPY pull it back at 389s, right around 388.70s here. Meta still rebounding some, too. All right, guys. All right, guys. Also, do me a favor, hit that like button, guys. We can do better than we have now here. We're doing a Twitter poll as we speak right now. All right, so we're doing a poll on Twitter. Vote on the poll right now if you want as well. We're gonna make this poll about what 3 hours long, maybe 4 hours long. All right, there we go. We got bounce, drop, neutral as reactions here. Let me know what you guys think. Market is potentially rebounding. I might buy a little bit of this dip. I see Tesla bouncing up. I'm going to buy a 20 share position here. A very small position on the SPY. All right, 20 shares. We might add a little bit more on the SPY. It's just a little baby trade, guys. I don't trust it a ton. All right, so we might add a little bit more. I'm not going to hold this forever, though. Like, we're in 20 shares, so it's still a relatively small position. But I'm not going to hold this too long, in all honesty. What's up, Shepard? Yeah, that's basically why. A little bored. So I'll take 10, 20 shares. You know, maybe add a little bit more here down at the bottom of this range. And then if we really break down, I'll cut it. I think we're just at the bottom range. I'm in 30 shares now. We might get up to 40. Market dropped around the full moon. The next one, big drop, man. Honestly, traders are kind of like poker players in that regard, where they're just super. What's the word? They're super. Man, I know what the word is. I'm just drawing a blank on it. Chat, help me out. What's the word I'm thinking of? Y'all know exactly what word I'm thinking of. Superstitious. Thank you, Beach. That's exactly the word. Yeah, traders are so superstitious. They're just like poker players, you know? Like when I watch a football game, my OCD starts to kick in and I start thinking if I don't watch the game, then, you know, it's my fault they lose, you know? I think poker players are the same way. I think traders are the same way. All right, we're in 40 shares of the SPY right now at the bottom here. I will unload this very quickly if we crack under lows, though. So I will unload this very, very fast if we do break lows. I think FRC is an interesting thing. Let's watch to see if it holds at 22 here. Market is really starting to flush, though, so I will have to cut this fast. Again, I'm not going to worry about it too much if it breaks lows. I think that we're right at the bottom of the range, and I still like my entry here. So our entry is right around here. And so I still think that's fine. But I also think it depends on what some other stuff does. I think we're getting some pullbacks in other blue chips. Hey, maybe, bro. We'll see. Hey, what's up, Dylan? First Republic. Yeah. Yes, no. It might say that right underneath me. You know? There's evidence of the moon phases. It's an active indicator on TradingView. Currently, we're in a bull moon. Yeah, but I mean, there's correlations everywhere, though. Correlation doesn't mean causation. I think the big thing to understand in that regard is like, look, there's a correlation between the amount of people who watch Nicolas Cage movies and the amount of people that fall in swimming pools. All right. But it doesn't mean it's the causation of it. All right. So we're breaking under this low. I bought a little bit here. FRC is rebounding back up. So I do want to see if this moves. What's dropping the market right now? What stock is it? It's not Tesla. Tesla pulling back a little bit. But it looks like we're probably going to have to unload this one. I could also potentially add more and then just keep a really tight risk, which I think I might do. All right, we're in more. We got 50 shares. It's $20, so I'm not super concerned about it, but the internet is a silly thing. I think sometimes Twitter's funny. All right, so it looks like adding to that position was okay so far. We're pretty much flat at this point in time. Our average now is 24, so our average is right around here. But I just hope we don't crack under 388 and hold that level as resistance. A lot of it is based around First Republic's momentum. All right, so a lot of people are talking about like the differences between now and 08. Burry compared what we have now to 1907, which was called the Panic of 1907. It was a financial crisis set off by a series of bad banking, decisions and deals, and a bank run caused by basically the public not trusting banking started in 1907. JP Morgan and other really, rich and wealthy Wall Street bankers had to essentially loan their own money out to save the United States from a big financial crisis. It took the largest banks in the world and the largest holders, the richest people in the world, essentially had to all get together and save the banks. The stock market bottomed 3 weeks afterwards. So yeah, we're going to cut this now. We took a little risk, $30, but the market is just starting to really quickly break down here. There's just too much red action for me. I generally like extension dip buys, but not here. I think once we start to really crack under 388 and then get another low of the day break, I think there's just too much risk. And it might fake me out right there, but, it's all good. But yeah, the Fed was created shortly after this crisis in 07 to avoid situations like that in the future. And so, but the big thing to understand, and the reason a lot of people might be starting to get some optimism in markets, is because the Fed was created to avoid this, and a lot of people are comparing what happened with Silicon Valley Bank, where they're basically ensuring that depositors, other banking and corporations and the FDIC are coming in and ensuring the depositors of San Diego or of Silicon Valley Bank. And a lot of people are relating that to what JP Morgan did in that 1907 crisis, and essentially that saved it. And you can kind of see the bounce here that we got from that. This was in 1907. If you look at the Dow here, I could show you. So basically, or what's the Dow? What is it? Is it DJI? I think it's DJI. Yeah. So here's the Dow, right? This happened in 07. Let me see if we can look back all the way to 07. I think we can. So yeah, here's the 07 banking crisis, basically. And again, so you can kind of see here that the market bottomed afterwards. And what happened here is let me get a better view of it. So yeah, so this is it, right? But what happened here is that JP Morgan came through and insured and injected some money and insured and protected the banks and protected the, the bank run in the market. And you can see shortly after that we got a nice bounce back. And so, to be honest, what we're seeing now from Michael Burry is a surprise look at optimism. Like, surprise optimism is what we're seeing in Burry. Burry is actually optimistic that the market's not going to crash. And so I don't know how I feel about that, but that's essentially what everybody's looking at right now and comparing what we're in now to. A lot of people are celebrating, saying that the crisis is avoided now because of the insurers they're doing on those depositors at Silicon Valley Bank. So let me know if you guys think that this is over and think that we'll start to see a bottom. If this is what happens, then maybe there's some arguments for some dip buys here, to be honest. Like, there might be some arguments for some dips here. But again, I'm not saying that's what we're in, but I think it's an interesting look, to be honest. Well, I think people are already what people are already correlating it with, though, Bob, is they're correlating it with um, with with all these other um, entities insuring the deposits at Silicon Valley Bank. And so they're basically saying that's the same thing that happened in 07. In 07, it was JP Morgan swooping in and saving it. And now it was who insured the deposits at Silicon Valley Bank. Yeah, so top Washington officials agreeing to a bank rescue. They're basically saying the same thing. So yeah, Jerome Powell, Federal Deposit Insurance Corporation, FDIC, Chairman Martin Grunberg, White House National Economic Council Director Lael Brainerd, they're all basically coming swooping in to, spend. And I know the taxpayers are ultimately paying for it, but the point is that the bank was saved, and that's going to save a lot of stuff. Like, to understand what really would have happened if that didn't go through, like if they didn't insure the depositors here, guys, it would cause financial chaos. More so than we're already seeing. So more so than we're already seeing. It would have caused chaos if those deposits weren't insured. Because right now, what happened essentially with Silicon Valley Bank is that all the investors lost money. Like, if you invested money in SIVB, you lost it, basically. So if you invested money in Silicon Valley Bank, you lost it, basically. But if you held money there as a banking customer, if you held deposits at Silicon Valley Bank, you're going to get your money back, all of it. It's not just the FDIC insures up to $250,000, but they are insuring all of it in Silicon Valley Bank. Look at FRC dump, though. Look at FRC dump. I think this is an interesting thing to watch. Watch First Republic here. What's up with this mini boost we had? Well, PPI came in lower than expected, which is good. No, stocks would shoot up way more. Maybe. But you also have to understand that, like, relative to the yearly range so far, like, here's a 180-day chart, right? Relative to the yearly range so far, we're still pretty okay. It's not like we were moving towards lows here. The lows are at 340s on the spot. We're at 380s, almost 390. And so we still got a ways to go. This is the last 6 months, and we've basically been flat over the last 6 months. We're green, we're slightly green. The market has essentially done this. Let me make this a little bit larger. The market has essentially done this here. The market has gone like this. Market has gone from like down, like about right here, and it's basically done this over the last 6 months or so. Now, of course, we've been in a pullback period for sure since late January. But the question now is, do we do something like this? Do we bounce back up? Do we crack under lows? If the banking problems continue, we could make a run towards lows. But as of now, we're not really at any terrible level. Like, we're at 390, which is it great? No. Is it bad? No. It's kind of neutral, I would say, relative to the range at least. Hey, what's up, Beach? Yeah, all good, brother. All good, man. Yeah, if y'all want some good swing trading content, check out Beach Bum's channel. It's at youtube.com/beachbumtrading. I'll post the link here. Good swing trading stuff. He talks about a lot of this stuff too. What do you think about? I don't know much about that one, Bronze. So yeah, brother, I just don't know much about that one. Bobby Caldwell passed away. I think it's time to buy FRC in the long-term view. Yeah, I think there might be some arguments for that for sure. But I think there's also risk because FRC has been one of the banks that have been in the most danger relative to the other ones, right? So FRC is one of the banks that people are looking at skeptically. I think people are looking at it skeptically. I think people are nervous about it, and I think people are going to be skeptical to a certain extent of FRC. I think if the banking crisis continues, I think it could trickle into FRC, and I think that's the next target. Silicon Valley Bank is now marketing themselves. What a Silicon Valley Bank is now marketing themselves as the single safest place to keep or transfer your deposits, fully insured with no limits or caps. What a ridiculous thing. Which is the risk of the government stepping in and doing this. Is that, like, if we step in, what are the unintended consequences here? I think we talked about this yesterday, but what are the unintended consequences of the bank stepping in and insuring everything? Right? Is that going to mean banks are going to be more risk prone? Like, that's the problem, I think, really, is that banks are going to be a little bit more risky now if that stuff happens. Um, you know, uh, All right, guys, we're at 387.70s on the SPY. We've kind of established some lows. I do kind of want to buy this here. I might buy up a little bit more. We're going to jump right back at 50 shares here. I don't know if it's the right move. We'll have to wait and see. Here's Tesla on the left. Tesla at 181s or so. FRC goes down, it's going to start a bank run this country hasn't seen in 100 years. Yeah, that's for sure true, But I think it's not super likely, but if it does go down, it's going to cause problems. Well, it's not really bailing them out, Michael. Like, the thing to understand is that, and I think there's problems. I'm going to go ahead and take 25 shares of this off just because we've locked in profit very quickly on that bounce. So we just locked in 50% of the profit there. Made our money essentially back for the somewhat. But yeah, the problem is that it's not saving the bank. The problem is saving the bank's customers. Okay. Because, like, think about all the people that held money. Imagine you have a bank account that's got, imagine you work really hard in your life and you save up a couple $1 million. And that's like your full net worth, brother. Your full net worth. Imagine that's like your full net worth, a couple mil. And you got it in Silicon Valley Bank. And then Silicon Valley Bank goes under. And they don't insure the deposits. And so your $2 million just shrunk down to $250K that the FDIC insures, right? That's going to cause turmoil in your life. You're going to lose everything you had, and it's not just one person. This is tons of people. This is thousands and thousands and thousands of people that are going to lose a lot if that happened. And so the bank is still done. Like, Silicon Valley Bank is still done for the most part. I mean, it's still technically there, but it's going to be worth so much less, if they ever resume. But what they're insuring here is the depositors. What they are insuring are the people who had money in the bank, because those are innocent people for the most part. There's a difference between speculating on buying shares of Silicon Valley Bank and a difference between holding money in their bank. That's a big difference, Yeah, for sure. Yeah, 100% wisdom. I've got a bunch of banks, to be honest. I don't have just one. I'm not about that, bro. I don't want to. I don't want to feel what. Okay, here's the problem. All right, so what's gonna happen? And this is already kind of a consequence of it anyway. But what's gonna happen if they don't insure the money is that what would happen if they didn't insure the money? Okay, is that everybody that has money in a small bank, literally everybody that has money in a small bank, and this already happened to a certain extent. But if they did it to where they didn't insure the deposits, literally every person that had money in a small bank would withdraw their money immediately. It would be a huge bank run and immediately switch to a big bank, the top four. They would go to Bank of America, Wells Fargo, JP Morgan Chase, and Citigroup. Okay. So what that would do, and that's already happened. People are already losing trust in the small banks, right? But it would happen on such a larger scale in that situation. If the full deposits weren't insured, it would happen on a much larger scale that small time banking would be in big trouble. And so, that's essentially what pressing for no deposit insurance would do. It would just make it consolidate. It would make everybody consolidate into the big four: JP Morgan, Bank of America, Citigroup, and Wells Fargo. Yeah, so we do have the ECB decision today. The ECB decision is important for sure. It drops at like 9:15. I think it's 9:15. Let me see. Yeah. All right, guys, we still got about an hour left before jobless claims, the Philly Fed Index data here. And this is just another data release to add to this, to be honest. Just another data release. We'll see what we get. Hopefully we get some good data today. I'm hoping the market goes up. But remember, so this will be the last release until next week's rate hike. Next week's rate hike decision. So next Wednesday, we have a rate hike decision coming out. So on Wednesday, we got a rate hike decision. FRC fundamentals are sound. Yeah, for sure. Yeah, for sure. That's when it really gets bad. Yeah, I mean, I'm not saying the big banks didn't already, get a lot of users transferring their accounts to them. I'm not saying that. That obviously is going to happen to a certain degree as well, right? But imagine 10x the amount of transfers over relative to now, right? Imagine if it happened 10 times worse. What you'd see is you would see almost all these little banks fail. Everybody would leave. They wouldn't have any customers. They would all move to the big four. We bought Google and Disney yesterday. I think it was yesterday. It might have been the day before, but we bought Google and Disney on the dips. We're still holding a little bit of Disney. We scaled out of most of Google already. But yeah, we cut, Yeah, but I mean, I think that's just, I don't know if that's the best mindset. It's bad. You know what I mean? I don't think we should want anybody to be poor. I don't think that's a right move. I think that if somebody works hard and makes money, you got to be happy for them. You can't just be bitter at them. I think that, but at the same time, I understand, I think billionaires should be taxed a lot. I think they should be taxed a lot. And they are to a certain extent, but I'm okay with taxing them, a bunch. But I also don't think we should hate wealth necessarily. I think it's just how people want to live their life. All right, so market's bouncing back up again. We still got 25 shares here, kind of making back what we lost earlier in the day. But a nice little bounce all the way back up to 388 plus. I don't think most of them hate, people on that. Not that, I mean, I don't know, to be honest. I'm not really necessarily super rich. I mean, I'm comfortable, don't get me wrong. I live a, comfortable life for sure, but I'm still probably like, let me see the, Hmm. Okay. All right, market pop it up a little bit. Yeah, for sure. Yeah, but I think if you deposit, I'll put it this way: I would rather the money go to charity regardless. It just can't be their charities or anybody that they know is charities. Uh, yeah. So today's data is jobless claims in the Philly Fed Index. So a nice little bounce back in my trade here. I'm going to take most of this off just because I lost like $30 and then like I lost like $30 and now I've essentially made it all back. And so I could sit on 10 shares and maybe add a little bit more. But you are getting that nice little rebound that we were looking for. I think I think it varies though, WK. I don't think it's all the same. Yeah, I can agree on that, comma, for sure. A lot of charities. Like I used to donate to a lot of charities, but at this point in time, I don't trust a lot of them. Like I think there's a lot of sketchy ones now, you know. Um, I just can't trust. Like an example is like going to Goodwill, right? You go to Goodwill shops, right? You think all that money is going to charity, right? None of the money that Goodwill makes goes to charity. If it, like literally, Goodwill is not a charity store. Like you go to Goodwill, you think you're supporting people. All they do is hire people. Like all Goodwill does is hire people. All the money they make goes to them. You know, the CEO of Goodwill makes like millions a year. Um, so I mean, I've lost faith in some charities, to be honest. All right, FRC rebounded back up, all the way back up to 24th. 24th. I don't think the bank issue is done. Yeah, I think it's an interesting look, though. Yeah, Scott. I mean, I'm not gonna say I agree or disagree with you. It's just too I think this is going a little bit too political than my taste here. I'm a capitalist. Don't get me wrong. I think the billionaire should be taxed. I think if you're making over like, I think if you have a net worth over like $2 billion, I think you should be taxed a lot. You know, and they are taxed a lot. Don't get me wrong. Um, and I'm not going to be too specific because I'd rather just probably move on with this conversation. I don't think it's necessarily going to go to I think there's going to be too much drama with politics, and I'm not really a political guy. So maybe it's my fault for talking about it, but I think I would prefer to change the subject at this point. Um, yeah, for sure, TM. You know, unfortunately. Yeah, I'm not gonna say they're bad, Abe, but they're for profit. You know, they hire people, and that's good. You know, but the same people could get hired and make roughly the same amount working at McDonald's or working as a car salesman or anything like that. You know, so them hiring people out of the kindness of their heart is a little bit misleading. But I understand the need for it. But you also have to look at it like they're paying them not that much, and they're taking advantage of the work that those people are giving them, and they're profiting from it. So I think I kind of got to criticize that. Um, but again, I think it depends on. I don't think they're terrible. Um, yeah, I'm just like I said. I really am pretty neutral politically. Markets start to pop up. We got a little baby 10 shares left. We'll see what it does. Yeah, there's literally a timer up there in the top left. It might be in the top left, guys. It could be. Might be. Um, What do you think about Ford stock now? I don't know. Where's Ford at? I cut it already. I already got out of it. Back down at 1160s. I think there could be an argument for a dip buy. I mean, look at my Ford trade though. Like, I gotta brag a little bit about this. Look at that, man. Look at me. I am just great trader right here. Look at my exit here, dude. I'm serious. Look at this. So like this is a daily chart on Ford. All right. Like look at this trade right here. All right, so daily chart on Ford. I started to scale in literally at the very lows. 1193 was the last ad, and then I scaled. Look at I got out literally right at the top. So I got to pat myself on the back a little bit here. That was a solid trade for Ford, man. My swing trades have been pretty solid. Again, don't copy me. Not an investment professional. I have no idea what I'm doing. I might be wildly wrong about everything, but I got to pat myself on the back for this Ford trade because, again, you guys can see I got out about a week ago of my Ford trade, and I told people I got out of it, but literally at the very top of this thing, I got out. You know, I got a couple hundred shares, started adding in 1150s, 1190s, and then sold at 1230s, 1240s, 1260s. And then got out. And that was basically the top of the range of the last couple weeks. So I will take it, man. I will take it. Hey, John, if the Fed pauses rates, would that crash the market? Probably not. But I don't know. Generally, and again, it's never for sure, and I think yesterday's PPI report shows this, but generally, okay, the less rate hikes, the more optimistic and positive the market reactions have been, right? So like if the Fed does 25 basis points and people expected 50, the market is generally going to go up, but it's certainly not a for sure outcome. You know, there's more nuance to that. It could essentially do whatever, you know, based off of any individual day. The market could do whatever it wants to do. But I think that if the Fed goes zero with rate hikes, I think there's going to be some optimism short term. But I think there also may be some long term worry that inflation is going to get out of control. And so, to be honest, I'm not sure what kind of reaction we're going to get. I think we're in a very different market right now to where the reactions are not a for sure thing. You know, again, yesterday we had much lower than expected PPI, great PPI data, great data all around yesterday for inflation data. And the market initially reacted negatively to it. It did eventually bounce back. But what I'm saying is like, usually I can say, okay, well, like lower PPI is good and make market pop up. Higher inflation data is bad, will make the market go down. I think right now it's a little bit less known. Like in terms of reactions, I think it's a little bit less known in terms of like what kind of response we're going to get to this stuff. I'm going to go ahead and get out of my SPY trade. We just made basically, you know, all our money back on this trade, essentially. Let me cut it there. So yeah, we basically made all our money back on the trade. So that's nice. We wrote it back all the way up. But again, I think we're starting to kind of tap the top of that. What do you guys think? Is tomorrow quad witching? Hey, what's up, Tony? Yeah, I'm not the best person to work with somebody. What's up, Mark? Mark said, good morning, everyone. I know the banks are risky, but what are the chances they make a rebound today? PACW in particular, hitting 14. What is PACW? PacWest Bancorp. I don't know enough about this company. I think there's a chance they bounce back. I think there's a lot of optimism floating around that the banking crisis was averted, and a lot of people are optimistic and excited for potentially rebounding markets. But I also think that there's, you know, still some question marks regarding the safety of banking right now. But I also think it's kind of a high risk, high reward situation where, you know, if you're looking at some of these banks on a really long-term zoomed out view, I think there might be, you know, some potentially good prices to get in right now, considering like really cheap banking stuff, and with all the banks essentially failing, I think there's also some interesting spots to get in to some of these. Uh, Schwab just did really strong numbers, all the way back up to $60 a share here. But yeah, thank you so much for the donation. But I think there's a chance that we rebound today, but of course it's not for sure known. But yeah, thank you, brother. I appreciate the donation. Um, yeah, I feel you, Giovanni. I kind of agree with you, brother. Kind of one of those unknown markets. How do you think the price of Bitcoin is going to react? I really don't know. I think Bitcoin is going to react positively to more jobless claims numbers. I think it's right now we're in this period of like inflation fearing market still, but I think yesterday means that the reaction is unknown. I think that there's a chance that if we come in higher than expected for jobless claims, the market reacts positively. And I think there's also a chance that it's the other way too. So again, it's just not a for sure thing right now. Yeah, all good, Mark. I appreciate the donation, brother. Thank you. Yeah, I don't know. I think some people don't have the option to work for themselves, you know. Um, I think I'm the type of person that I truly am entrepreneurial in nature, you know, and I think a lot of people call themselves entrepreneurs because it sounds good, but like I genuinely am entrepreneurial in nature. Like I've worked at a lot of different offices and corporate stuff, and like I've always loved it. Like I enjoy the competition. Like I'm a very competitive person, and I think if you want to be successful in stuff in life, like you got to be competitive. You know, I'm incredibly competitive. One of the things I try to teach my kids is to be competitive, because I think having that competitive drive in anything, sports, business, whatever it is, I think that's what ultimately makes you do well, is being competitive and pushing to get better at stuff. But I don't think everybody has the option to work for themselves. I think I understand both sides, I guess is what I'm trying to say, and I get it. You know, it generally takes a while to be successful in business. You know, they say the average person who starts their own business fails 6 times before one sticks, and I can certainly attest to that. I think that's about right. Is that the average person? It takes 6 tries in business before you get one that sticks and is actually successful. And again, I've had a couple different successful businesses, and so I also think uh, research plays a big factor into that. But I don't think it's as easy as just kind of starting a business and you know, not working for somebody else and starting your own business. It's not as easy as that. Now you can kind of do that now with like Uber. You can do it with like Uber and Lyft and Uber Eats and stuff like that. I think right now is a point in time where you can work for yourself pretty easily if you want to, and make enough money to where you can take that money and then start another business. But it also depends on where you live, in all honesty. You know, some places it's going to, you know, cost a lot more to live. And so, you know, that's going to vary a lot. But market popping all the way back up. Maybe I should have held my shares here in the SPY. What is nice, though, is that um, the market is bouncing back up to 399. Let's see if we can break the previous closing price. I just want to see volatility. You know, I just want to see volatility. Look at Tesla rip up a 181. Also, yeah, I think it's. I think you gotta. I think most businesses fail. You know, and I think that's from my experience. That's basically true. Where it's like I started a bunch of different businesses that didn't work. You know, but you learn a little bit with each one. You know, I started a bunch of social media businesses that didn't work. But again, you kind of slowly learn and learn. as you get better and better. You slowly learn more and more each time, and then the next time you do it, you're a little bit more refined with it, and then the next time you do it, you're a little bit better still, and that keeps improving to a point where eventually you'll get it right. But it takes time. It really does. And it can, like, it's the big thing. The main reason a lot of people don't work like that is because they try and then they fail and then they stop, but again, like I said, they say on average you get 6 failures of businesses before you get one that succeeds. And that's very true in my opinion, from my experience at least. But yeah, SPY at 388.80s here. Let's see 389s right now. Yeah. Yeah, man. I didn't like corporate either. I worked for a few different corporate scenarios where, like, I remember I worked for this company and, like, I did better in the placement exams, on the testing for everything. It was like it was a company where I managed people's benefits, like health benefits, and I learned about like insurance and PPIs and HMOs and primary care physicians and discounts and different I basically managed United Airlines health insurance is what I did. And it was nice and all, but there's too much politics involved with it, man. Like I did really well, and I was a temp, and in my opinion, I scored higher than everybody on my testing. Like when they would review, I had the highest ratings. I would score better than most of the other people on my rating system and my testing. But when it came time to make me not a temp and actually put me into the actual company, they took a bunch of other people who were more friendly with the managers and they made them employees, and then they tried to keep me a temp. One of the best decisions I ever made, and I was just kind of like, look, and I left, and I was just kind of like, hey, look, I quit. Like, if y'all are gonna try to keep me a temp for another year, like I'm out. I think they probably thought they could do it, and I would stay. And so then when I left, they called me and they reached back out, and they wanted to offer me the job. But at that point in time, I was so frustrated with them for just trying to pull that I didn't end up working for them. I just kind of quit and never went back to them. One of the best decisions I ever made, because that kind of started the cycle of me doing this stuff. And there were some other health things involved with it at the time. Like Carol had some health stuff going on, and so I kind of had to be home to take care of her. And so, yeah, that's essentially, but again, it was one of the better things that happened to me. I think if I didn't end up quitting that job, I'd probably still be working corporate for much less money, but anyway, SPY up to 389s here. Let's see if we can break it. It's still at that level. Hey, good luck, MS. Hey, bro, I hope you made some money, man. It looks like you did on that trade the other day, brother. So congrats, man. Hey, it's bad and hello TP. Listen, I don't know if the argument's really going to get anywhere, guys. I think it's just better to just kind of kindly ignore each other. You know what I mean? Just be friendly. But yeah, just kindly ignore each other. Y'all will be all right. Yeah, for sure. All right, guys. Tesla popped up to 181.60s here, 181.60s. SPY at 389s. Yeah, SPY up to 389s. Let's see if it moves back here. FRC up to 23s here, guys. We still got about 40 minutes before the jobless claims data comes out. 40 minutes here. Yeah, I'm from Louisiana originally, but this wasn't in Louisiana. Yeah, it's bad. Listen, it's bad, comma. Y'all stop arguing with each other. Don't say argumentative things and just try to press each other's buttons. That's clearly what both of y'all are doing. Y'all chill out, man. Again, kindly asking you guys to stop arguing with each other. Anyways, SPY at 389. Let's see if it breaks it. Rejected at that whole dollar level. It's now over the volume weighted average price. And also, to put this into perspective, the jobless claims today is expected to show up at 205,000. So we'll put this up on screen so you guys can see it. We'll put this up on screen. So we got jobless claims expected at 205K. Philly Fed index expected at. We also have housing starts as well and building permits. So we do have building permits today, man. That's my fault, dude. I didn't even see that. Man, I was wrong here. Hold on, man. That's my fault. Man, I see what I was doing wrong. Okay, here. I forgot about building permits today. Completely forgot about building permits today. All right, yeah, so I completely forgot about building permits. There we go. So yeah, building permits today. Look at the market dump down. There's the volume weighted average prices right there. We got FRC sitting right at that level now. Any thoughts on if FRC will pop? Yeah, I don't know. I think it's an interesting thing to watch here. Look at FRC start to fall, and I think that's going to drag the market down. I think there's a lot of sympathy in that regard. Yeah, so we got the ECB rate hike decision today at 9:15. Yeah, we're going to cover that as well for sure. Yeah, all good, MS. You still made some money, bro. Congrats, man. Yeah, for sure, Corey. Like, I work for myself too, and it's people say they want to work for themselves until they gotta pay taxes. Paying taxes is the one thing I never understood why everybody hated taxes up until I started working for myself. Now I get it completely. I freaking hate paying taxes, man. I mean, I pay a lot. I pay tens of thousands of dollars in taxes, but I don't like it. You know. Yeah, so the rate hike decision for ECB, so the European Central Bank rate hike decision is today. Very relevant data coming out for sure. We also have building permits. Philly Fed index is expected at minus 15.6. Building permit are expected at building permits are expected at 1.34 million. And then we also have housing starts. Yeah, all this data drops at 8:30 here. We're putting all these numbers up on screen. These are the expected numbers for all this stuff. The expected numbers for building permits. That is basically everything to look for today. A lot of stuff coming out. Yeah. Yeah, so the ECB is expecting, so the ECB rate hike decision happens at 9:15 today. They are expecting a 50 basis point rate hike from 3% to 3.5%. So they're expecting 50 basis point rate hike. And the press conference is going to be at 9:45. But yeah, the ECB is dropping their rates at 9:15 today. The rate hike decision is going to be announced, and the press conference will be 30 minutes later. But I don't know if we're going to stream that or not. Probably not. But yeah, the ECB rate decision is expected to be 50 basis points from 3 to 3.5%. Market dipped down a little bit. Let's watch FRC. FRC is moving some too. We got about 30 minutes before all this stuff comes out. So buying WAL. I think long term there might be some edge in buying bank stuff now, but I think there's risk short term. So hey, thank you, man. I appreciate the support, guys. Should be the yeah, I don't know for FRC. I don't know how it's going to be interpreted. I am on Thinkorswim right now, Giovanni. Short analysis on market reaction to predicted numbers. I think if we come in lower than expected for jobless claims, that's going to make the market react positively. But again, jobless claims is the one where we get the most variance in terms of reaction numbers. So jobless claims are the ones where like the potential reaction we get to both sides of the data release is lesser known and lesser of a for sure thing. Less of a for sure thing, I should say. So yeah, so jobless claims is the one that has a little bit more variance than the other ones. I'm gonna say. Oh wow, that's crazy. Where do you live, Shepard? What's the biggest thing to watch for today? Jobless claims. External audit. Yeah, I could never be an accountant. It would be so difficult. Hey, thank you, Kelly P. I appreciate it. Hey, we love you too. You know, we appreciate the support. Yeah, audit. I could never be an accountant. I'm pretty good with numbers, but like, I don't know. I just don't know if I would like doing it. You know what I mean? All right, so the SPY just popped back over the volume weighted average price. Very low volume. I think everybody's kind of waiting for the jobless claims numbers to come out. And we got about 30 minutes before this report drops. Meta is actually up really big, man. Meta is over $200 a share, which is surprising. Tesla at 181.40s here. The SPY over volume weighted average price. I'm thinking about buying the dip short term, but it's going to be small size if I do. So I'm going to buy the dip short term. We're going to get in small size 25 shares, see if we can pop back up. But I also am going to cut this very quickly if it doesn't work out in my favor. So we will sell quickly. Yeah, so Edwin Diaz, man, I'm looking at the Fox Sports video of Edwin Diaz hurting his leg. Bro, I hope he's okay, dude. You know, baseball starts this month. I'm hoping he's okay. I said baseball starts March 30th. All right, so we got a little bit of a bounce up. There's FRC at 23s right now. So 23s for FRC. Yeah, I'm not a big. Well, yeah, higher jobless claims numbers will probably be bullish, but again, I think this is less known of a reaction relative to some other stuff too. Uh, I think this reaction is lesser known. You know what I mean? I think there's going to be more variance in terms of reactions for jobless claims. At least there has been. Like we've had jobless claims numbers over the last couple months that they were much higher than expected, and the market moved up from it. We've had jobless claims numbers over the last couple months where they were much lower than expected, and the market moved up some from it. So again, I think it's less for sure. So it's tomorrow. Okay, so tomorrow is quad witching day, right? I'm not tired. I mean, it's 7 a.m. I've been up since 4:30 in the morning in Texas time, but I got some good sleep last night, in all honesty. All right, so again, we're in 25 shares of the SPY here. I will sell this ahead of the report, to be honest, for sure. Like I will cut this pretty quickly ahead of the report. All right, so getting a little bit of a pop up here. Tesla's still at 181s. Yeah, for sure. I get money pretty quickly. Hey, what's up, relaxation? All right, guys. Jobless claims numbers at 8:30 Eastern Standard Time. We got about 24 minutes before this data comes out. About 24 minutes. We got about 700 people here. So, hey, hit that subscribe button. Hit the notification bell. Another way, guys, that you can trade this. Looking at our poll numbers. Another way you can trade this is check out Top Step. If you want to trade just like I'm trading, you see how I'm trading the SPY right now. You can do the same thing on the E-mini. It's the same price action. It's literally the exact same thing. You can kind of see this is a 1 minute chart. This is a 1 minute chart. It's the same price action. Bounce, dip, bounce, bounce, dip, bounce. This is the exact same thing. And you can day trade this right side here with no PDT restrictions in futures. You can day trade short the futures market with a margin account. There's no $25,000 limit like there are in stocks. And so you can essentially get access to the S&P 500. We're going to cut this trade. We just lost a little bit here. Just too big of a drop. I'm guessing from FRC. Yes, there goes FRC dipping all the way down to 21. So I think the SPY is a little bit volatile to day trade today. But yeah, if you want to day trade it though, futures market is where you can do it. Top Step is the lowest barrier of entry in doing this, right? So the huge edge of Top Step and other funded account programs like it is that you can day trade and short in futures and test your skill. So what they do is they give you a demo, and if you can hit the target on their paper demo account, and they have a lot of resources, like you can build rule sets for yourself, and there's just a ton of resources that they use to help you get better at trading. And it's so much cheaper to try a funded account program than it is to put up the money yourself. The big thing you need to understand is that if you try futures yourself and you put up $10,000 or $15,000 in futures and you lose, you could potentially lose thousands of dollars. And so it makes so much more sense if you're just getting started to try a funded account program. The base one on Top Step is $140 a month or so, about 130 something a month, I think, if you use my link and get the 20% off. And it's so much cheaper. If you can pass it, you can get 90%. So if you can pass their testing, you keep 90% of your profits once you're funded, right? So if you can hit their profit target while following their rules, they'll fund you between 50 to 150K with a 90% split And once you're funded, you keep 90% of your profit. And if you lose, it's not the end of the world. You're only down $140 basically. And that's a lot cheaper than if you put up the money yourself and risk that. You still have some pressure to succeed, but not the full extent of like a live account. And it just makes a lot of sense. It's just a great middle ground to test your skill without taking on a lot of risk. And I would have loved to have something like this when I first got started trading, because frankly, I would have just saved myself so much money. But yeah, here's the link. Check it out. Great way to help support the channel. They are a sponsor of mine, and so I'm certainly biased in their favor. But yeah. CPI data is acceptable and PPI is way lower than expected. Negative PPI rates are indicative of deflation, which looms decline or stagnation of growth. Yeah, maybe, but I think less PPI data also signals that we could already be on the upside with regards to inflation. Because most people, I mean, Kenneth, I mean, I see you commenting regularly, kind of critical of these funded account programs. Again, the big thing to understand, this is the way you have to look at it, man, is that most people don't have that much money, brother. Like, if you want to trade futures yourself, bro, you need at least $10,000 to $15,000 to take a couple contracts. To buy a couple contracts of futures, you need at least $10,000 or more. A lot of people don't have that. More so than that is a lot of people don't want to take the risk of learning to trade futures with that, right? Like, listen, you put up 10K, 15K in futures, you could have $1,000 swings up and down. You know, you can lose thousands of dollars doing so yourself. And so if you're a new trader and it doesn't make much sense to put up 10 or 15K and lose thousands of dollars brand new, you're just going to lose more money. You know, so it makes more sense to take a funded account program, have a limited risk, but if you're good enough, you can pass it and get a 90% split and keep almost all the money you make anyway if you can pass the test. And then if you don't pass the test, you would have lost more money in a funded account or in a regular account anyway, most of the time. And so it's just a lower barrier of entry that allows you to lose less if you lose. And if you still are good enough, you can still pass it and keep 90% of your profit. And so the only thing you're really giving up is 10%, and you're saving the potential losses that you're doing it, you know, that you're in those situations by a lot. You know, that's the big edge. Most people are going to fail these funded account programs as well. But that's the point, man, is that most people are going to fail these. But the same people, if they would have put up the money themselves, they would have lost way more than they did. You know, and so it's like they're saving themselves money, in all honesty, a lot of the time. And again, most people are going to fail. And a lot of people that take these funded account programs and lose, they're like, oh, it's a scam. No, that's the whole point, is that if you would have taken the same amount of risk in a regular account, you're going to lose so much more than you would in these funded account programs. Like, that's the big edge that you get from it. Good day to you, Benno. Yeah, if you want to check out Top Step, like I said, I am biased against it. You can check out the link in the description. Right, for sure. But would you rather learn how to do it with $140 risk, Kenneth, or put up 15K yourself and lose that out of pride? You know, I think that's the way you really have to look at it. Like, it's a good middle ground of pressure. You know, you have some pressure to succeed. You don't have the full extent of risking thousands of dollars like you would with a regular account. But you still learn how to trade under pressure, and you still don't like losing the funded account programs either. It's just a smaller risk. And I think that makes a lot more sense for new traders, to be honest. Oh, no, all good, Kenneth. Listen, no offense. If I thought you were dissing me, I'd ban you, bro. So I understand. Again, I'm open to constructive criticism on it. But again, I think you got to understand the real edge of it. The real edge is that most people are going to lose these funded accounts too. But that's the point, is that it's cheaper to lose a funded account program than it is to put up $15,000 yourself and risk thousands of dollars trying to learn that way. That doesn't sound good for anybody, you know? But again, I am biased. They're a sponsor of mine, so they pay me money. So, I mean, naturally, I'm biased in their favor. I always try to be transparent and honest about it. I just think there's a huge edge in learning how to trade that way. You know, and some people are going to be mad because, you know, we make money this way. And I mean, I think some people are just mad other people make money. But, like, the truth is, I think it's genuinely useful for traders. And if I didn't think it was genuinely useful, I wouldn't promote it. Yeah, I mean, Top Step's been around for over 10 years. They pay out literal millions of dollars every year in actual withdrawals for their funded traders and fund thousands a year. So yeah, Top Step is kind of who everybody else copies off of. FRC breaking the previous couple minutes lows here down to 2170s here, 2170s. Yeah, I was trying to ban him yesterday. Yeah, I was trying to ban Benno yesterday because he's just toxic, man. He just sits around waiting to disagree. He just seems angry. I hope he's all right, man. He just seems kind of angry in life. So, I mean, you know, it is what it is. But, yeah, he's out of here, man. I was trying to ban him yesterday, but we were having glitches on YouTube yesterday. It's about $140 a month for the base one, Joey. Yeah, Benno got DOS booted, eh? Yeah, we're going to cover it for sure. The Eurozone interest rate, the ECB rate hike decision. Yeah, we're going to cover that for sure. All right, guys, 15 minutes. 15 minutes. Yeah, we can put Tesla back up. I want to watch FRC, though. But yeah, here's Tesla on the right side. But look at FRC breaking down here. Down to 2160s. Yeah, super interesting. At 2170s. Low of the day today is 19. Yeah, I mean, the reality of it is a large majority of day traders are gonna lose money. You know, so you can either put up 15K of your own money and lose money that way as a new trader, or you can try a funded account program and have less risk but still test your skill, and if you're good enough, still get funded. You know what I mean? And I think that, again, from somebody who has done it, like when I first started trading in the first 6 weeks of me learning to day trade, I lost like $4,000 or $5,000 very fast. And so I wish, you know, there was another option for me at the time, because I would have still lost, but I would have lost less, you know. Meta at 200.6 right now, so Meta ripping up. Hey, what's up, Liz? Yeah, I hope we get some good action today. Yeah, Meta rip it up, man. Honestly, I'm skeptical of Meta though. I'm still nervous to buy it. I got stopped out of this last trade though, and then the market has just ripped all the way back up, just kind of doing what everybody expects it not to do. Market breaks down under VWAP, breaks lows, and it breaks range low, and then rips immediately back over VWAP and breaks 389. So it's just kind of whipping people out right now. I'm gonna stay pretty flat until ahead of jobless claims numbers, I think. Yeah, for sure. Right, exactly, Travis. I mean, Travis says it perfectly, which is that the funded accounts are great for learning. Worst case, you're paying a monthly fee to learn. And some paper trading platforms cost the same. Much better than losing your own money. Like, people still cry about it because, to be honest, a lot of people secretly are weird with me about making money. So like any sponsor I have, they're just kind of sitting around waiting to critique it because they don't want me to make money, basically. And that's fine. Like, it is what it is. I think it's human nature to a certain extent. But like, I think there's a genuine edge in doing so. It's just cheaper. It's cheaper to lose, you know. All right, guys, we got about 13 minutes. Market's actually flying up right at the previous closing price. So right at the previous closing price. Hey, what's up, Joe? Yeah, Meta, I think there's just potential risk. But I think Metas have been really strong. The only reason I won't buy Meta right now is because Meta was at $88 in November. $88 a share. It's at 200 now. It's up over 100%. So, I mean, I think it's a little bit too upwardly extended here from my taste. But I think there's vulnerabilities long-term for that one as well. But it's just kind of... it's just one of those things that aren't a for sure thing that I'm not super excited of investing in. No channel like that, Rahi. Yeah, I don't know. I think higher jobless claims are what. Um, I think higher jobless claims are ultimately what. I think higher jobless claims are ultimately what the market is going to react positively to. I think so. I think anything that means more spending is going to be interpreted as a negative right now. So anything that causes more spending is going to be seen as bad right now, right? And I think right now inflation is bad, so high spending is going to be seen as bad. But again, jobless claims is the least for sure thing. It's the release that has the most variance relative to others, in my opinion, regarding like potential reactions. So I think it's most likely going to be higher than expected. Jobless claims is going to equal a positive market response, but I don't think it's a for sure thing. I think we're just going to have to wait and see what happens. Yeah, for sure, Myth. I think over the last couple weeks, it's been a little bit less known. I'm not sure about how gold's going to react, to be honest. Do you think there's more recession or inflation fear? I think it's probably going to pivot back to more. I think with the market ripping up after PPI yesterday, it looks like we're still fearing inflation. And so a lower PPI number was interpreted as positive, and the market bounced back pretty heavily here. Again, you guys got to understand, like, when I told people I thought we might bounce yesterday, a lot of people called me a perma bull and made fun of me, you know? And then if you look at what the market has done, the market bounced basically. And I said all this stuff here, like right here, it really goes to show you sometimes you got to ignore the people that are just kind of yelling perma bull because they disagree with, they don't want the market to go up, right? But right here, everybody was calling me a perma bull when I was buying up stuff, you know? And you can kind of see, you got to look at extension. It has nothing to do with being permanently bullish. To be honest, I was flat over the last couple weeks a lot. Like I wasn't super confident on the bull side a lot. I just kind of I go with short-term momentum. I don't get so I'm not super loyal to a direction at all, I guess is the easiest way to put it. Like if I think the market's extended on the downside, I buy up stuff a lot of the time. If I think the market's extended on the upside, I sell my stuff, or sometimes I short, depending on what it is. But a nice little rebound into this, you know, data today. Now, jobless claims is going to be big fundamental and economical influence. So we'll see what happens. But you know, the perma bull comments got pretty quiet after the market bounced back. You know, and again, Meta is just looking ridiculously strong, man. Surprisingly strong, in all honesty. Oh yeah, my guy Orkin, my brother. Hey, thank you, man. I didn't see your post. He said, John, I and my friends are enjoying your channel a lot. Great facts and info. Also great background music. You do great, bro. Thanks. We keep supporting. I just want to say that. Hey, thank you so much, Orkin. I appreciate you, brother. Thank you, man. Thank you so much for the support, man. We got a lot of supportive people here. And so I genuinely appreciate the supportive people here for sure. I really try to run a free resourcing community. And I know people are going to criticize my sponsors sometimes, and people are going to criticize how I am sometimes. Nobody's perfect in that regard. Like I do my best to keep everything smooth here. Y'all get 4 hours of your day with me every day, basically. You spend 4 hours with me. And so I'm human. I'm gonna get frustrated sometimes. Sometimes I'm gonna overreact. Sometimes I'm gonna underreact. Sometimes I'm gonna bring up, the wrong stuff or whatever it is. I hope you guys understand I'm human, and I genuinely appreciate the support here for sure. This channel and community has grown a lot over the last year, partially thanks to Pawn and my mods like DS and everybody else. But also because of the community, man. So we appreciate the support for sure. We got 8 minutes here, guys. 8 minutes. And as you can see on the screen, jobless claims are expected to show up at 205,000. Philly Fed Index expected at minus 15.6. Building permits expected at 1.34 million. Housing starts at 1.31 million. They all drop at 8:30. We will cover all this data live. Let me get all this stuff. Now that we speak about this, let's get this ready here. So yeah, last few data releases have been on point, especially with how fast we've been reporting it. Hopefully we can do a similar thing today. We just got so much stuff today, to be honest here. We got building permits, jobless claims, housing starts, Philly Fed index data, all dropping at 8:30 today. Hey, thank you, Jen. I appreciate it. I love this show. It's been a part of my morning. Thank you so much, Jen. I appreciate that. I appreciate that very much. Yeah, thank you guys. It's good to be genuine, John. Yeah, we try. We really do try, you know. But yeah, thank you guys so much. I appreciate it. Yeah, that's basically a profit taker. Profit taker says, John, you're not a bull or bear, you're a rabbit. Hey, I'll take a rabbit. You know, I'm Bugs Bunny over here. Market pull it back a little bit, though. Let's see if we actually bounce right around the VWAP area at 388.60s here. But yeah, thank you very much, Jen. I really do appreciate that $10. Thank you so much. Yeah, for sure. I think that's definitely an argument. You as well, Comma. Thanks, man. I hope y'all all make some money too. But yeah, so relaxation says if jobless claims is higher plus good PPI, CPI wasn't good, it was neutral. So it's really jobless claims. If jobless claims are higher, that follows good PPI, neutral CPI, bank collapse, lower or paused interest rate hikes. I think there could be some arguments to the upside. It just depends on how you think the Fed is going to, how you think the public is going to interpret it. A pivot to zero with regards to rate hikes. I think that is the question mark in that regard is how is the public going to interpret that move, you know, to zero rate hikes. I think they could interpret it both ways, to be honest. I think they could interpret it as a positive for, you know, market strength and, you know, some businesses are going to be doing better with less rate hikes. They could also interpret it as a negative because of potential future inflation fears. Both of those are reasonable arguments as well. Again, I don't know which one we're going to get. Let me know which one you think we're going to get. But 5 minutes left before the data comes out. Let's watch the volume weighted average price area. SPY's pulling back to it now. Hey, thank you, Shepard. Yeah, I appreciate it. Oh, we're going to throw it in some sub-only mode, guys. I forgot to throw it in sub-only mode. Today, we're going to break 103,000 subscribers, like without question. We might be there already, to be honest, but we should break 103K today. I think we're going to be pretty close. Yeah, we need 26 subscribers to break 103,000. So we'll hit that today for sure, without question. We'll probably hit it over the next 5 minutes. But hey, y'all, subscribe to the channel here. SPY did bounce right around the volume-weighted average price. We are now pumping up. You can see this interesting level here is the previous closing price. It's the light blue line on the SPY. It's the level which the market goes from red to green to red on the day. That'll be an interesting kind of level to watch. I think other traders watch the previous close. It's the green to red level. So we're technically red on the day on the SPY now, but we're pretty close to it. So we're kind of right around neutral on the day, sitting right around the previous closing price. So yeah, it'll be fun to see what happens here. Tesla dipping down a little bit ahead of the opening bell. I also want to put up the 200 EMA. That's a level I've been using a lot lately. And yeah, you can kind of see we bounced directly off of that actually. So. All right, guys, I'm going to put the dollar index up instead of FRC here. There's the dollar index on the left. I'm curious to see what the Dixie does. And you can kind of see the Dixie breaking down ahead of this report. All right, guys, 4 minutes here, 4 minutes. SPY technically green on the day for a split second right now, so that's good too, I guess. So this is a custom TOS script, Adam. All right, thank you. It's bad. I thought CPI was considered okay, acceptable. Yeah, it's acceptable. It was neutral. And so it's not bad. It's better than bad. I'll put it that way. It's better than higher. You know, CPI coming in as expected at 6% versus 6% expectations. It was neutral completely. The only thing that was slightly worse was core CPI. But CPI was neutral, and it was less than last time was the big thing. So I think last time was 6.3 or 6.4%. This time it showed up at 6%. So it came in at a lesser number than last time, but it was what the banks were suggesting or expecting here. So it came in as expected, basically. So again, it wasn't good or bad. It was neutral. PPI was positive. PPI came in noticeably lower than expected. where they actually came in at a -1% or -0.1% versus like I think it was like a 0.3% expected. So PPI came in much lower than expected, which is good. And so now we have the other side, which is building permits, jobless claims, housing starts, and the Philly Fed Index, all dropping in about 3 minutes. So it'll be interesting. I'm using Thinkorswim right now. Do you think Bitcoin's going to move as well? I think it probably will move from this. Again, jobless claims is a little bit lesser known of a release, though, in all honesty. So, like, jobless claims release is lesser known. It's not a for sure thing. It's not something that everybody necessarily can accurately, consistently predict which way it heads. So it's not something that we see such an obvious reaction to. But we will get somewhat of a reaction here. We got about a minute left, guys, about 1 minute. So again, hit that sub button, hit the notification bell. We appreciate it. I am showing, hey, thank you, Lan. I am showing jobless claims expected at 205, but it's going to vary depending on the source and the outlet. It's going to vary. It's never like all exactly, but I'm showing 205 expectations for jobless claims. All right, guys, 40 seconds. All right, so again, jobless claims expected at 205,000. Philly Fed expected at -15.6. Housing starts for February at 1.31 million expectations. Building permits at 1.34 million. Continuing claims expected at 1.715 million. So again, about 20 seconds here, guys. 20 seconds. Make sure you hit the live button next to the play button. So make sure you're not delayed on the stream. So make sure you hit the live button next to the play button, and make sure your live button is red on the YouTube play thing to make sure you're caught up and not delayed on stream. But here's the data coming out. 5 seconds. All right, so there's the release here. Waiting for the numbers to reset. We got a lot of data here. Waiting for the numbers. Looks like this one's released a little bit slower. Okay, housing starts. Building permits came in at 1.524 million versus 1.34 million expected. Jobless claims came in at 196 for the 4-week average versus 205 expected. So 192 jobless claims versus 205. So lesser jobless claims numbers, and the market has reacted negatively to this. We'll put the market up on screen. Again, 192 versus 205 expected here. Continuing claims came in lower than expected as well. Building permits came in higher than expected. So building permits came in at 1.52 million versus 1.34 million expected here. So we're going to put all this data up on screen. Housing starts came in higher than expected. So at 1.45 million versus 1.31 million expected. So we're going to put this up on screen as well. We got a lot of stuff, to be honest, going on here. So bear with me. We're going to put this up on screen, but worse economical data for the most part. But again, market rebounded all the way back up here. Housing starts came in at 1.45. So here's all the data right here on screen, all the data. So again, market is reacting somewhat neutrally to this. The interesting dynamic right now is that the dollar index is popping up to 104s. So the dollar index is loving this data. And I guess it makes sense because more people working is stronger for the US dollar. So the dollar index is moving up. But generally, there's an inverse correlation with this. You can see Tesla popping up, actually reacting fairly positive to this number report. The Philly Fed Index did just drop here at -23.2 versus -15.6. And this might be what the market likes, because this means a more weak manufacturing sector, which might be seen as a positive there. And you can see that data up on screen. We'll actually post this to the comments section. But yeah, so far neutral reaction in markets here. We didn't really do much, but the dollar index is loving it. Again, less people working is bullish for the dollar. Yeah, but like I said, this reaction is a little bit less sure of a thing. It's definitely less for sure of a thing relative to a lot of the other stuff we cover here. But that is the market right now. Again, Philly Fed came in at minus 23.2 versus minus 15.6 expected. Jobless claims came in lower on both continuing and initial. Building permit number for February came in at 1.524 versus 1.34. So higher building permits than expected, higher housing starts than expected. And so all the way around, yeah, we're going to be covering the ICB rate decision for sure as well. Or the ECB rate decision, I mean. At 9:15. All right, so let's go ahead and get ready to cover the ECB rate decision. All right, guys, so we're going to get ready to cover the European rate decision. Market is pretty flat here. We'll see what the ECB shows up as. At 9:15 is when the data comes out. We still got about 45 minutes before that drops, but we're going to cover it too. We're changing the meta of our page here. So bear with me here, team. We are getting this ready. All right. Bear with me, guys. We are all right, guys. So yeah, like I said, we are getting everything ready here. Bear with me, team. We got our ECB rate decision coming out too. All right, so 9:15 dollar index breaking down here. So a quick flush in the Dixie here. All right, so yeah, ECB rate hike decision. I'm looking at like First Republic. At First Republic, from this jobless claims report, has started to bounce up slightly here. What's really interesting right now, and I think one of the more interesting things to look at currently, is that the dollar index and the market have a positive correlation right now, which is very strange relative to what we normally get here. This is odd relative to what we normally get. Yeah, we can put a timer up. So yeah, the ECB rate hike decision is going to be at about an hour, and it's going to be at 9:15 actually. I'm sorry. So it's going to be it'll be about 25 minutes. So this is going to be 0. So it's going to be in about 35 minutes. A little bit less than that actually. So it's going to be, let's see. About 37 minutes here until the data comes out. All right, so there's the ECB rate hike decision. Dollar index is pretty flat. Market is pretty flat on this data as well. Tesla break it down here. If you look at FRC as well, we'll put the dollar index as an interesting watch here. But look at FRC. FRC at 2220s. Yeah, I think they're going to do 50 basis points. And also, guys, for everybody here, if you want to check out a funded program and trade this volatility, again, if you look on the right side here, you can see Tesla breaking down, and then you can see the E-mini breaking down as well. So a lot of these big stocks move with the market, and you can day trade this right side here, which is the same thing as the SPY, essentially. If you zoom out here and you look at this, it's the same price action. You can trade this right side with futures, with no PDT rule. It's the easiest exposure to stocks with day trading, essentially the S&P 500 in futures. But you can do it without the PDT rule. There's no PDT on futures. Again, I talked about this earlier, and this is probably the second plug I'm doing today. But it's the second plug in like 2.5 hours. And so averaging a little bit less than one plug an hour, I think is pretty reasonable. But again, the whole point of this is that it's so much cheaper to test your skill than it is to put up money yourself. A large majority of day traders lose. And it's a lot cheaper to lose a funded account program. You know, the base package on Top Step is $140 a month. You're essentially day trading the S&P 500, or you can really day trade any commodity, oil, gas, whatever you want to trade, right? But I trade the E-mini, which is the S&P 500. And again, you can day trade it. And if you lose, it's not the end of the world. But what they do is they give you a demo. And if you can hit the target and follow their rules, they fund you between 50 to 150K. So they test your profitability with a demo account. If you pass it, great. They fund you with a 90% split between 50 to 150K. But if you lose it, it's not the end of the world. Most people lose in day trading. A large majority of people lose. And that's going to be the same thing. Most people are going to lose these funded account programs. But that's the point, is that it's so much cheaper to lose this than it is to put up 15K yourself and risk that. And so in that regard, it's just much cheaper to test yourself using something like this than it is to put up thousands of dollars yourself and risk that. It's a great kind of introductory to the futures market is really what it is. And it's cheap as well. It's $140 a month. If you lose it, you can reset it for $100. And they're the most legit one in the world. They pay out millions. They fund thousands of traders every year. So again, if you want to check them out, help support the channel, you get 20% off. Here is the link. Great way to help support your boy here in this channel. So if you get funded, there's a max loss as well, you know, but it's going to be a little bit looser. But yeah, if you get funded, they're not going to let you just YOLO it. All right, but market is starting to break down here. Market is starting to break down. Yeah, inflation getting better, man. But the problem is jobless claims says yeah, so it'll be interesting to see what we get here, guys. Market's starting to break down. FRC pulling back down, kind of influencing the market heavily here. Remember, I'm certainly biased in Top Step's favor. They are a sponsor of mine, so I'm just biased in their favor because they pay me money, and I think it's pretty normal for me to be biased in that regard. But again, just I think it's genuinely cheap to save yourself money in the beginning. Like if I could have started over in trading, I would probably go immediately to a funded account program and learn to day trade with one of them. You still get some pressure. You still got the pressure on you. It's not like you're just not doing anything because you want to get funded, but you're not taking on the risk like a lot of new traders do. You know, the PDT rule is just absolutely ridiculous, man. It really is. It makes it so that you make a new day trader that wants to day trade stocks have to save up $25,000 to do it. And then what new trader has risk management, right? So you're basically making a new trader who doesn't have any risk management have to save up 25K to actively day trade more than 3 times a week. And you could say, oh, we use a cash account, but bro, a cash account is severely restrictive. Like you can't do anything with a cash account. You're not going to be able to get some reps in and actually learn. You're going to be able to trade 3 times a week, you know, less than that sometimes with the cash account, depending on the situation. But yeah, just kind of hard to do. Let me get the music rolling again. Can you explain why the dollar index coming in lower, or why jobless claims coming in lower is bullish? It's bullish, or it's bullish for the dollar and bearish for the market. All right, and again, the nuance of this is this, right? So anything that causes more spending right now in market terms is bad, right? So in that regard, and I'm not saying I agree with it, but more people working is going to be seen as a negative right now for market activity. And the reason for that is because it means that more people are going to have money to spend, and more people spending and having, money right now. And I'm not saying I agree with it, because I want people to be successful. I want people to have money. But in market terms, more people with money is going to be seen as a negative, because it means more spending, which means higher inflation, which means higher prices. And that's not good right now. FRC, break it down. Why is the market ripping up while it's happening, though? What's going on right now? Let me see. All right, so natural gas pipeline company has lifted the force majeure on both Gulf and Coast 1 and 2 South line of compression station 302. But yeah, I don't know why the market's bouncing back. Kind of a really volatile price action today. Yeah, for sure, Philip. That's exactly right. That's why the market reacts negatively to more people working right now. Yeah, Craig. I mean, if you're one of those people that like, if you're one of those people that criticize me giving short-term descriptions of price action, you're not going to last very long here, brother. No offense to you, man, but like, it's like, dude, I'm just explaining the market. The reason we have a 1 minute time frame up is because we have economic data coming out, and people want to see the most up close reaction to that data. So yes, I think a move down here like this is justifiably called a breakdown. A move from the volume weighted average price, a full dollar move in about a minute, I think it's justifiably called a breakdown. Again, I'm not saying I want the market to break down, but like, again, we get a lot of people here sometimes that try to critique short-term descriptions of price action, and I think that's silly and just argumentative. So, I think justifiably it's a breakdown, brother. But I mean, it's all you, man. Any earnings today? Not really. Not any big ones. Yeah, day trading's super hard, bro. Most people lose. Yeah, for sure, Jay. Thanks, man. Show them Chart Prime. All right, I got you. Yeah, Chart Prime is pretty cool as well. Another one of my sponsors, genuinely useful here. And again, this is a sponsor. I'm biased in both Top Step and Chart Prime's favor. I try not to plug anything for the first few hours. And so now that like we've covered all the big economic data and we've been streaming for hours and hours now, I'm going to plug a couple sponsors. And honestly, if it bothers you, it's really more of an issue with yourself, because, again, I think averaging 1 or 2 plugs an hour is pretty reasonable for streaming 4 hours a day. But yeah, so here is Chart Prime. Right, look at how dope Chart Prime is. Like, people can criticize it, and that's fine, but like, look at how accurate the reversal indicators have been. So Chart Prime is a trading view service that you can use in stocks, crypto, forex, futures. You can use it on whatever you want, really. But they give you custom reversal signals. They give you automatically documenting support and resistance. They show you where candlestick patterns are, like this bullish engulfing candle. And so using a 1 minute chart, you can see how accurate these reversal signals are. I can't guarantee you're going to make money because they're a sponsor of mine, and so I'm biased, of course. Nobody can guarantee you're going to make money. But the real edge, number one, is they label support or resistance. And so you can see this dotted line right here is the strongest support or resistance line on that specific chart, whatever time frame you're using. And look, when you get the reversal down signal and the bearish engulfing candle, look at the drops you get over like a 30-minute period. Again, you get multiple reversal down signals and the dotted line, which is, again, the strongest resistance signals. You get drops over like an hour period of time. Again, this one called a bottom as well. You get the reversal up signal, you get a bounce over like 15 minutes. This bullish engulfing candle calls literally the bottom here, and these do not repaint. At least the reversal and the candlestick indicators do not repaint. Again, a reversal down signal here, drop. 2 bearish hammer candles and engulfing candles, drops. And so I can't fake this here. I genuinely can't fake this. And again, I'm not one of those people that bases my trading all around this only. But I think using this to find an extra edge in the market, like using it to confirm my sentiment in trades, works really well for me. Works really, really well. It's very cheap as well. Chart Prime is like 35 bucks a month, right? So 35 bucks a month, and it should give you the discount on checkout. 35 bucks a month for something like this, I think, is pretty solid little, you know, amount of money for what they offer. And this is just a small percentage of what they offer here. So like you can also check this out and look at the chart pattern. So I can look at a longer term time frame as well here, and I can look at like a hour chart. And so watch, this time frame shows you movements over an hour period of time. And look at the chart patterns they show you. They show you this wedge pattern here. And look at the reversal up signal. So look at this. Like I want you guys to see this. Like this one was over literal days. It called this reversal signal. And then over literal days, you had a bounce at the very bottom. So it literally called the very bottom of this with the chart pattern as well as the reversal up signal. And each candlestick represents an hour. Look at how long that thing followed through with the reversal. It called out literally at the bottom. It dropped, it gave the reversal signal, and it bounced. So genuinely useful, in my opinion, genuinely useful. It's called Chart Prime if you want to check it out. Again, they are a sponsor of mine, but something I genuinely use on a daily basis, you know, for my trading. So check them out. I'll put the link in the description if you're interested in learning more about it. Yeah, discount to checkout is what it does. Yeah, it works while the market is live. I don't know what song just played, so forgive me for that song. So the reversal signals show up after the candle closes. So yeah, it's in real time. It doesn't just show up. So like if I'm looking at something, it'll put the reversal signal out about a candle behind it. So it'll be about one candle behind it from my experience. So Top Step allows you to use like 10 or 15 different brokerages. So you can use TradingView on Top Step. You can use Tradeovate. You can use RTrader. You can just use. There's a lot of platforms work with Top Step. I'm not sure about your phone, Justin. I mean, it's a TradingView indicator service. So if you can use TradingView on your phone, I'm pretty sure you can use Chart Prime on your phone too. But I'm not 100% sure, to be honest here. Gold and silver, I really don't know, man. I really don't know. I'm not sure, Myth. You want to reach out to them, bro. I think that they have a lot of universal brokers that partner with them, so you can use kind of whatever you want to use for the most part. All right, guys, market is kind of sideways as we speak here. We ended up dipping all the way back down and then bouncing all the way back up. So just kind of consolidating back and forth. Okay, yeah, I think that's what I meant to say, Sam. They give you the option of platform. Yeah, dude, what do you guys think? We bounce here? Did I do another poll yet? All right, so we got the poll. 48% of people thought we had a green reaction. Yeah, so it's just a custom trading view indicator. So we're going to do what rate does the ECB rate decision, or does the ECB decision come in as? We're going to do 25 basis points, 50 basis points, or something else. It's going to be the three options. Vote on that poll. It's at 9:15 here, guys. So we got about 25 minutes or so. 22, 23 minutes. Yeah, the inverse correlation might be right. Yeah, I've got a Z Fold though. So Valtieri says you can use it, but analyzing it's harder. Yeah, I probably have a little bit more of a unique situation though because of my phone. Like I have a Z Fold too, and so you can see here like I genuinely have like my phone is like an iPad. I can fold it up and then use it like this, or I can open it up like an iPad and use it like that, you know. And so you can probably see it on my phone, but I think everybody's a little bit different in that regard. Yeah, I'm gonna change this music. Yeah, it's a pretty cool phone. All right, market bounced it up a little bit. FRC still there. I'm gonna put the Dixie up here too. I'm also gonna start to get Quant Tower set up for this. We're doing pretty well, to be honest, on Top Steps Combine here. We've been, like I said, my TOS account's already funded, so I got about 120,000 in buying power to trade with on Thinkorswim. So it's like I don't really need to get funded by Top Step, but like I've been playing around with it anyway, and we've been doing pretty well. Like we've had like we've had no losing days this month, believe it or not. So in terms of our combine, we have not lost on a daily basis once. So pretty pumped about that. I think in trading, it's one of those things where you got to pat yourself on the back sometimes if you're doing well. But yeah, you can kind of see my graph here. Last 7 days, up about 550. We made a little bit yesterday. So you can see we made a little bit after commissions. It's kind of a break-even day. But last week, done pretty well. Last month, So doing all right. Our profit factor is about 2.5 to 1. And so I'm really liking my accuracy. The dollar index broke down, but the market's pretty flat and choppy. I think the ECB rate decision will be an interesting dynamic in the market today as well. No, I'm not going to start selling it. My advice, it's bad. It's day trading. And so I think anybody trying to sell anybody trying to sell stock picks for day trading is usually just sleazy, I trade so fast it would be essentially worthless to sell it, but this is bear music. Yeah, I mean, I think the expected rate is 50. What is Nate? It's about 4x. So I've got about a $30,000 account or so. Dollar index moving up. We should see an inverse correlation between the market and the dollar today, I think. So you're talking about Chart Prime, Kevin? It's the market oracle is what shows you what I just showed you. Little Tonka. You ever watch Tonka, the poker player? I used to watch all this stuff. He stopped making YouTube videos though, but All right, so FRC bouncing back. Let's see if the market follows it. What's interesting is that the dollar index is starting to rebound too. It's at 104.53 currently. Yeah, all good. Yeah, people sell it stock picks. Yeah, I mean, it depends. Like honestly, I think my swing trades have been good enough lately to where if I wanted to sell them, I could. And I don't really want anybody to copy me though. I think it's too liability ridden for me to do that. So I'd rather just tell everybody not to copy me, and they can make their own decision. But yeah, don't copy me. I have no idea what I'm doing. I might be wildly wrong about everything. I don't have a price target for FRC. I'm not holding it at all. I'm not touching that thing, man. It's too much risk. I think long term, if we get some stability, maybe I'll buy it up after that. No, I day trade and swing trade on both, Jessica. And I'm green on the year in TOS. Do you think price suppression is legit, or do you think it shouldn't be there? I think sometimes when inflation is getting out of control, there needs to be some steps taken to fix it. But I think it's a really nuanced thing that I think yes, it should be allowed, but with restriction. Anybody try Chat GPT Chat GPT 4? Yeah. Anybody try Chat GPT 4? Is it good? Is it better? Is it better for building code? I guess is the real question. All right, SPY pulling back down a little. Get dollar index still popping up. Oh, I have Bing. I have the Bing thing. Hold on. All right. All right, so I'm testing out the new Bing AI right now. See how long it takes to build me this code. All right, so yeah, the ECB decision is about 13 minutes, guys. 13 minutes. All right, so all right, guys, market pulling back down a little bit now at 387.50s. All right, so it is riding me up a script right now. Let's try this out. So it is writing me up a script right now. Get all this stuff out of the way. All right, let's see if it works. So it's writing me up a script. The problem, like, I've had it write scripts before, and usually it's not the best code. So we're gonna see if this one works. No errors. Ooh, it did work. So that's actually okay. Yeah, so we are breaking the lows of pre-market right now at 387.50s here. 387.50 starting to break down. The dollar index is at the very top of the range, but we are watching FRC currently as we speak. Here, hold on. I will figure this out. Hold on. Bear with me, guys. I'm kind of playing around on this here. But yeah, guys, so it is now past 9 o'clock. We got about 10 minutes before the ECB rate hike decision. All right, guys. So market bounced back up a little bit at 387.70. So the dollar index is at 104.50s. All right, popping up a little bit. The dollar index is at 104.50. So it's starting to pull back a little bit. That should cause some bullish action, I think. All right, we're seeing how smart it is now. We're testing this now. See if this works. No, it didn't really work there. All right, there's the market bouncing back, like we said. Dollar index is starting to fall back down some. So for my trading view programmers here, you know what, I've messed around with this a little bit. For my trading view programmers, what is the code that tells you to put it on the actual chart? I feel like it's like inline true, if I remember. I'm trying to think of what it was, man. It's been a while since I worked on trading view programs. It's like I don't want to say it's inline true or something like that. And I've done some stuff before here. I just can't remember what it was. Yeah, Pine script is what I'm talking about. When you want to make the indicator appear on the actual chart, not below it. I want to say it's like inline true. I'm running a blank. I can't remember. Y'all might be able to help me out. Yeah, 25 basis points. I think that'll be less likely. I think it'll probably be 50 basis points. No, this is Pine script. Let's say it's overlay true, maybe. Let me try to save this and add this. No. No, overlay true is giving me an error code. Maybe it's overlay. Maybe you got to put quotes around it. No, it's still giving me an error code. No, it's still giving me an error code there. Yeah, is that it? Well, that's what I'm trying. Indicator overlay true is what I'm trying, but that's not working. Is it capitalized? No. Oh, maybe I got to put it in parentheses, but no, it's still giving me an error. So that's not working. I've done this before. I thought it was overlay true, but for whatever reason, this just is not working. The rate increases and decreases don't matter for banks currently falling. Cuts can't rectify their bad decisions. No rate hike. I don't think we're going to do 0 for sure. I think it's going to be something else. For whatever reason. Oh, I know my man, I'm dumb. My problem is I forgot to separate it with a comma. There we go. That should actually fix it. Thank you. That was actually correct. So I appreciate that, Galileo. That's what I thought it was. But it's been a while since I've programmed Pine script. But yeah, that's what it was. It was overlay true. So thank you, brother. I appreciate that. But yeah, so a lot of times programming is just like one simple error that you're making in it, which was just me forgetting to put a comma in front of it, which is a common mistake. But yeah, so we're going to get ready to trade some futures today. Market's starting to break down. We will short the market if it starts to continue to look weak here. So I will short the market if it looks weak. But here we are right now. Market is consolidating here. And we'll see if we break down or not. We do have the ECB rate decision in 5 minutes. 5 minutes for the ECB rate decision. So, yeah, it'll be interesting to see what happens. So the dollar index just cracked under the 200 EMA. And so it's starting to really break down now. Guys, market rebounding a little bit. Dollar index breaking lows. Market is still trying, but the Dixie did break under the 200 EMA here. The ECB rate hike decision is going to be showing up in 12 minutes. We're going to get our sources ready for this too, for the ECB rate decision. In 2 minutes, guys, 2 minutes. We got our stuff ready. It should update it pretty quickly for us here. But yeah, the ECB rate decision is in Again, the ECB rate decision is in 2 minutes, less than 2 minutes. All right, guys, here we go. Market pulling down a little bit, guys. We have very short amount of time left. We got about a minute left, a little bit less than a minute. Market's starting to break down ahead of this here. All right, guys, here we go. 30 seconds. 30 seconds. Rate hike decision is going to be out in 30 seconds. Let's watch to see what happens here. Remember, make sure you hit the play button next to the live button. All right, guys, here we go. 5 seconds. All right, we are ready here. Again, we're expecting 3.5% from 3%. Market is dropping down some here. The data showed up as... This one's taking a little bit longer. All right, it came in at 3% versus expected 3%. It came in as expected, guys. As expected at 3% versus the expected, or at 3.5% versus expected 3.5%. So again, it came in at 50 basis points as expected. It doesn't look like the market's liking this though, but it came in as expected now at 3% versus 3% expected here. 3%, or it came in at 50 basis points with 50 basis points expected is what I meant to say. Sorry. So as expected. All right, so they hiked rates 50 basis points in line with pre-guidance. And the market is not really loving this, understandably so. I mean, a lot of people were saying 25 or 0. I think that was a little bit naive of people to expect. Usually, I'll put it this way. The rate hikes decisions are usually pretty on point with regards to accuracy. They're usually pretty on point. Like now, CPI, PPI, jobless claims, there's some variance in terms of reactions and potential rate hike decisions. With CPI, PPI, with the release, there's usually some variance. With rate hikes, it's generally, what you think, what the analysts expect it to be. So, yep, 50 basis points as expected here. Do y'all want me to stream the actual conference? I can. Looks like we got a lot of people tuning in for this. Yeah, I'm honestly surprised the market's breaking down so much on a as expected rate. I think a lot of people don't understand rate hikes. Again, if there was such a big chance of doing 25 or 0, then that's what the banks would expect. The fact that most of the banks expected 50 basis points shows that that's probably what it's going to be. Like the retail traders might think they know more than banks, but I promise they don't. And that's the big important thing to understand, is that the retail traders do not know more than the banks with regards to what the potential rate hike is going to be. So if the banks are expecting 50, it's almost certainly going to be 50. And that's pretty understandable, I think. Yeah, we'll stream it. So no, this is the European Central Bank, Shepherd, the ECB. But yeah, now with that said, market's starting to bounce back up to basically where it was. So we're kind of actually flat on this, which makes sense. Yeah, so there we go. We just rebounded all the way back up. Yeah, we're pretty much flat on this now. Hey, thank you guys. We did break 103,000 subs here, team. So, hey, we appreciate you guys. Maybe more than Credit Suisse, maybe, maybe potentially. All right, so market is bouncing back about pretty flat on this report here. I mean, we dipped a little bit, but we're basically pretty flat. Yeah, we stream the Fed one for sure. We stream all the big stuff here. So again, everything we stream here, we stream CPI, PPI, jobless claims, retail sales. We stream the Fed rate hike decisions, ECB decisions. We stream Jerome Powell press conferences, big earnings, all the big earnings reports. We stream those too. So again, we cover everything stock market related, really, all the big news, especially. All right, market breaking down again a little bit, but not a ton. It's just mostly testing the lows. All right, so the DOJ is urging the Treasury to assert that the $500,000 cap on administrative forfeiture does not apply to Bitcoin and crypto. All right, guys, so market testing lows. This will be an interesting spot to see if it breaks down here. Exxon? 99.50s. Yeah, Exxon breaking down. Oil and gas have been kind of in trouble. Yeah, they did 50 basis points. All right, guys. Market bounced it up a little bit right around the lows of the day. Exxon broke lows at 99.30s here. Still patiently waiting for the market to open up. We got a couple minutes here before it does. Yeah, so the ECB rate hike decision. Yeah, I'm looking for the video here. I think they might do it on YouTube, right? I don't usually stream this. Where do they usually stream it? Let me see. There we go. In-depth explanation. Okay, I found it. All right. Yeah, I found it. All right, gotcha. All right, I got it, guys. We'll stream it. All right, guys. So yeah, market bouncing up. We still got 6 minutes here, guys. 6 minutes. All right, guys, bear with me. Here we are. Getting everything ready here. Got the ECB conference streaming in a couple minutes here. Market opens up in about 5 minutes. Market bouncing up a little bit ahead of this stuff. ECB already came out. It's at 50 basis points. The actual press conference is at 9:45. We'll stream it for you guys. Likes to code in his free time. Sounds like me. Sounds like me over there, man. You know. All right, guys. We still got about 3 minutes left. All right, guys. Yeah, so market bouncing basically straight back up. Been mostly sideways here ahead of it. I don't think it's hawkish. I think 50 was as expected. It was neutral, Daniel. Again, what people really have to understand about rate hike decisions is that leading up to it, if the big banks expect a specific thing, it's almost certainly going to be that specific thing. I cover all the rate hike decisions, and I have for a decent amount of time at this point. I've covered a lot of them. They're almost always as expected. Very rarely does the Fed do something outside of expectations, both in the U.S. and overseas. And so in that regard, it's almost always as expected, man. So if they're expecting 50, it's going to be 50 almost certainly. With that in mind, though, in the rare situations where it's not as expected, you do see a more brash reaction to it because it's so unexpected, right? But most of the time, it's going to be 50, and it's all relative to expectations. And 50 was what was expected, regardless. No, you're all good, Daniel. I'm not criticizing you, brother. I'm just kind of help. I'm trying to help everybody here understand rate hike decisions, bro. So I'm not criticizing you, man. You're good, bro. Uh, yeah, 50 was almost at what was certainly going to happen, I think. But again, with that said, in the rare instances that they do something outside of expectations, then it usually causes a little bit more brash of a reaction, you know. We were waiting for the stock market open in about a minute and a half, and then the press conference is at 9:45. Yeah, well, the experts don't know anything unless if the banks are the biggest experts on the matter because it has to do with them. So the banks are the experts. Now you might have influencers and like other people out there trying to act like they know, but the banks are who it really matters in terms of expectations. And almost all banks expected 50 basis points too. Um, all right, yeah. So less than 30 seconds here, about 20 seconds left. All right, here's the open. Market's mostly been sideways from the ECB rate decision. Hey, good luck, DS. All right, there's the opening bell. Let's see what we get at the open. Again, kind of choppy action heading into pre-market. Slight downtrend. All right, market moving up a little bit at the opening bell. A little bit at the open. Market moving up some. Good to see. See if it continues. Is there a potential dip buy argument in Exxon Mobil? I might buy a little dip here in Exxon. Small. It's not filling me. Weird. Wait, what happened? Do I need an EXT order right now? All right, yeah, I had the EXT in. All right, I just bought a little bit of Exxon. Market's starting to look like it's going to crack lows here. Yeah, just wait for the open. Little. I'll probably go short. Depending if the market breaks down, I will. It depends on if the market looks weak or not, man. Again, right now it's starting to break down, but I generally need to wait a couple minutes after the open before I really start to take anything. I still trade on TOS on stocks and on futures. I trade the E-mini though. And I've been using the same platform for, almost a year now. I think maybe not quite a year. I have 4 monitors. I've got a 34-inch ultra wide. The one y'all see is a 34-inch ultra wide as well. I got a 27-inch on my left and a 27-inch on my right. All right, market's starting to break lows. Looks weak. We'll get ready to short some small size here if it really breaks down. We'll take one contract here, but we'll cut it quick. But one contract on the short side, and we'll add a little bit if we get like a weak bounce, maybe. I still think it's probably a little bit too early for me to trade. All right, so we got 2 contracts now, short. See if we flush down some more. Kind of flat right now, break even on the trade so far. We're in Disney. I got 10 shares left, so it's not really like a really meaningful trade for me. So I'll probably just stay in Disney because we only got like a couple shares left. We already scaled out of basically all of it. Get very close to cutting this. Yeah, we're gonna cut it. Just too big of a bounce back up. No, I don't live purely off of my trading profits. No. But this channel's not really like a day trading channel necessarily. Like it's a little bit of everything. Like mostly we cover economic data here. So it's like we report on news and the economy mostly. I like that upwick here. We're going to add a little bit more to this. Wait, am I freezing up here? What the heck, bro? I just froze for a couple seconds and now I got 6 contracts. What? Well, I guess we'll stay in 6 contracts. I didn't mean to take 6 contracts though. What? What just happened, man? Got a little bit of lag, and then when I resumed, I guess I'm gonna cut this, but like, kind of frustrated now, to be honest. Did anybody see that? Like, I kept adding to it, and it was frozen. Luckily, I got a really nice cushion on the day. But if I lose my green streak because of something dumb like this, I'm gonna be kind of frustrated. Yeah, I'm gonna have to cut this, man. Honestly, so frustrating, bro. Did anybody see that, man? Like, maybe I should have just immediately gotten out of it, but like, so frustrating, man. Like, we're down $160 basically from like a lag glitch. My XOT trade's doing well, but very frustrating, to be honest. Like, I kept clicking the button and nothing happened. And then I kept clicking it again and nothing happened. And then when it finally filled, it gave me 6 contracts worth of it. And then it's ripped up big, just kind of bad luck, I guess. But, ugh, not fun for me, you know? But again, it's all good. The big thing in moments, like stuff like that is going to happen in trading. The big thing I have to do is just not let it get the best of me and just kind of reset myself. And, you know, we'll be all right. Yeah, I guess just bad luck for me, I guess, and it's all right. Like again, the big thing is that I don't get too frustrated and take too much risk on days like today, which can happen. Losing days are inevitable, you know, and so I just can't get too frustrated and take too much risk or size, you know, because of it. I just got to be smart, be patient, and just try to find an edge. Yeah. Yeah, I just got into another revenge trade. I'll probably start to slow it down here. Down about 480 on the day. Not my best day. Kind of a frustrating day. We tried trading the regular E-mini. But I think what I'm going to do right now is I'll probably, with the choppy action in the market and the rate hike decision coming up in about 8 minutes, I think I'm probably going to slow it down heavy right now. I don't want to try to play revenge trade right now. I don't want to try to snowball it into more losses. And so I think one thing I've noticed is that, like, look, my account can certainly handle this. Just kind of a frustrating period of time. But my account can handle it. That's my graph right now. And so a little bit frustrating, but, you know, I'll be all right. just think of it as a charitable donation to somebody else. Honestly, yeah. I mean, that's kind of how I'm looking at it. You're welcome, guys. I'm gonna go ahead and cut a little bit more off of my Exxon dip buy that I just got into, though. Some, yeah, for sure. And like I said, I'm all right. I've done it enough to where I've done it enough to where, like I said, I'm green on the year trading on stocks. I'm green on the year trading futures. So I'll just chill. 8 minutes. We got the rate hike decision press conference. Yeah, market did end up bouncing back up though, and again, I mean, to be honest, I'll be okay. Like again, it's not that big of a deal. We're gonna have some haters that try to press my buttons now that I'm losing, and like it's all good, man. Like I said, in the end, we day trade, but we also swing trade, and we make enough money running this community to where I'm still gonna be green today. I promise, no matter what. And so haters, y'all can make fun. It's all good. It's all love here. I am happy about Exxon though. We did make some money in Exxon. So I might cut a little bit more of it. I guess I'll sit on it. We're up a little bit in Exxon. So we bought the dip. Our entry on that one is 99 and it's at about 99.50 right now. So Exxon bounced back a little bit. The question is, do we add more on this pullback for Exxon? Yeah, for sure. I mean, like I said, in 5 minutes we got the rate hike decision. Oh my gosh, dude. Oh, today is just not my day, bro. Ugh. Ugh. I just drank old coffee. It was yesterday's coffee, but it didn't taste good, man. Oh man. Everybody make fun of me, Um, today is not my day, man. I gotta get these coffee cups out of here. Do you think First Republic is closed? I don't know. Yeah, this is actually the first losing trade I've had this month, to be honest. Or this is actually the first losing day I've had this month. I mean, and we made up for it for sure. But like, here's my graph. But again, it was mostly due to an error at first that sparked it. But that stuff's gonna happen in trading. And again, I think the best case scenario on days like that, in all honesty, I think the best thing you could really do in that situation is just to kind of step away. It's really tempting to try to win back your losses. Um, I think I'm just gonna step away. And we'll get back into the swing of things tomorrow. Tomorrow's Friday. I think tomorrow's quad witching day. Um, yeah, today I'm definitely top three, for sure. Yeah, James is taking over. Yeah, I guess so. Hey, nice, Beth. Yeah, I mean, like I said, I think again, I usually buy extension is what I'm looking at. So like Exxon down over the last 2 or 3 days, pretty decent percentages. I mean, it looks like Exxon is down like it was at 110s a couple days ago. It's at 99s now, so it's down like uh, it's down a little bit under 10%. Over the last 3 days or so, 4 days. So a little bit under 10% drops in Exxon. And so I think that it's justifiable to buy that dip for a short term bounce once we're at like $99. So that's why I bought it and it's bouncing back nicely for me. We'll see if it keeps up. Um, what happened? So what happened? Yeah, for sure. Stepping away is the right move. And again, I don't even have any qualms about it. Like I'm just gonna stop. If I keep pushing today, that's when you destroy your accounts, right? And so I'm just gonna not trade. It's all good. Like I said, my days have actually been really nice. Here's the last month, and then here is this month so far. So it's like this is the first losing day I've had this month, and it's the 16th. So I made it 2 weeks plus. Um, but yeah, the rate hike decisions in 3 minutes here. Yeah, all good. I appreciate the support, guys. Yeah, yeah. Again, the big problem, and again, I can use this as a lesson for everybody here. Is that a lot of traders are actually winning traders. Okay, like a lot of day traders are winning day traders, but their problem involves risk management. And so it's like they win, but when it comes time to step away from the computer, when it comes time when they have a losing trade, they win, they've got high accuracy. But when it comes time to actually like accept a losing trade, they're unable to do it. Right. And so instead of walking away like I'm going to do today, they instead push a little bit more and then they lose more. And then they say, oh, well, I'm going to double my size. And then they lose more. And then they say, well, I'm down so much already. I might as well just kind of YOLO my account. And then they lose everything. And then their account's gone. Maybe they're eliminated from their funded account program, whatever it is. That's how it happens. 100%. That's how it happens. And so again, a genuine thing that you have to do as a trader is you have to condition yourself through repetition. It's kind of like Pavlov and the dog. You know, you need to classically condition yourself. Like Pavlov and the dog. You do it over and over and over again until it becomes second nature, and including stepping away. I've done this enough to where I'm completely done. I'm not going to take another day trade today. Very small loss. To be honest, I'm not even super mad about it. I've had enough confidence in my swing trading to where my day trading is important, but if day trading's not turning out well, I could just look at swing trading. But it's been a good enough month to where I'm not super upset about this. But yeah, if you want to check out Top Step, like I said, I'll post the link. Great way to test your skill. Great way to learn how to trade, test your skill. My TOS account's got about 120K, and so I don't need Top Step, but a lot of people don't have it like that. And for them, if you want to learn to day trade, futures has no PDT rule. So, if you do it on stocks, you're going to be restricted by the PDT rule. The futures market has no PDT rule. And Top Step and stuff like it are the easiest way to test your skill without taking on a lot of risk. They're funded account challenges. So if you can pass them, they fund you. If you don't pass them, you're still saving money, because if you would have tried to do it with real money, you probably would have lost anyway. So a great way to support the channel here. It's the most legit one in the world. They pay out millions of dollars every year in actual withdrawals. And again, a great way to help support the channel. They pay me money, though, so I'm super biased in their favor, of course, since they're a sponsor of mine. They pay me money. But if you want to check it out, here's the link. Great way to help support the channel. Here is the rate hike decision. Guys, we're putting that up right now. They've got y'all can hear the music, right? I'm closing this down. We got the rate hike decision up. And yeah, bear with me. Pun intended, I guess. Bear with me. They have not started the rate hike decision yet. I'm going to mute the music here. Here, let me make sure I can do this. Yeah, I'm going to mute the music here for a second, guys. Just to make sure that this cheesy hold music doesn't show up. I know we got the press conference ready here waiting. So market has been ripping up, though. It's finally starting to pull back some, but we got the press conference ready, waiting. This is called Quant Tower. Oh yeah, little $500 profit on the short side, huh? As the market ripped up after the open. All right, so here's some guy stepping in. Let's see if they're ready. Again, I got the music muted so you can't hear it. All right. Here we go. They got this terrible hold music playing. Yeah, the music's muted, so y'all can't hear the music. Scarves, I know it's Europe. Yeah, scarves are not big in the U.S. here. Maybe we just not cultured enough for scarves over here. But yeah, scarf equal. I don't know if there's ever been a more true statement. Yeah, I know y'all can't hear the music. You're not supposed to. Yeah, so I know y'all can't hear the music yet. We're waiting for the music to go off. It looks like it's about to be done now. Let me know. Sound check. Sound check.
Good afternoon and welcome to our press conference. I'm joined on stage by President Lagarde and Vice President de Guindos. My name is Wolfgang Preußel. As we are connected via video to some who are connected on screen, I would like to ask you to turn on your camera and your microphones if you ask questions later on. And with that, I give the floor to President Lagarde.
Thank you very much. So good afternoon. The Vice President and I welcome you to our press conference. Inflation is projected to remain too high for too long. Therefore, the Governing Council today decided to increase the three key ECB interest rates by 50 basis points, in line with our determination to ensure the timely return of inflation to our 2% medium-term target. The elevated level of uncertainty reinforces the importance of a data-dependent approach to our policy rate decisions, which will be determined by our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are monitoring current market tensions closely and stand ready to respond as necessary to preserve price stability and financial stability in the euro area. The euro area banking sector is resilient with strong capital and liquidity positions. In any case, our policy toolkit is fully equipped to provide liquidity support to the euro area financial system if needed, and to preserve the smooth transmission of monetary policy. The new ECB staff macroeconomic projections were finalized in early March, before the recent emergence of financial market tensions. As such, these tensions imply additional uncertainty around the baseline assessments of inflation and growth. Prior to these latest developments, the baseline path for headline inflation had already been revised down, mainly owing to a smaller contribution from energy prices than previously expected. ECB staff now sees inflation averaging 5.3% in 23, 2.9% in 24, and 2.1% in 25. At the same time, underlying price pressures remain strong. Inflation, excluding energy and food, continued to increase in February, and ECB staff expects it to average 4.6% in 23, which is higher than foreseen in the December projections. Subsequently, it is projected to come down to 2.5% in 24 and 2.2% in 25, as the upward pressures from past supply shocks and the reopening of the economy fade out, and as tighter monetary policy increasingly dampens demand. The baseline projections for growth in 23 have been revised up to an average of 1% as a result of both the decline in energy prices and the economy's greater resilience to the challenging international environment. ECB staff then expect growth to pick up further to 1.6% in both 24 and 25, underpinned by a robust labour market, improving confidence, and a recovery in real incomes. At the same time, the pickup in growth in 24 and 25 is weaker than projected in December, owing to the tightening of monetary policy. The decisions taken today are set out in a press release that is available on our website. I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Turning to the economic activity first. The euro area economy stagnated in the fourth quarter of 22, thus avoiding the previously expected contraction. However, private domestic demand fell sharply. High inflation, prevailing uncertainties, and tighter financing conditions dented private consumption and investment, which fell by 0.9% and 3.6% respectively. Under the baseline, the economy looks set to recover over the coming quarters. Industrial production should pick up as supply conditions improve further, confidence continues to recover, and firms work off large order backlogs. Rising wages and falling energy prices will partly offset the loss of purchasing power that many households are experiencing as a result of high inflation. This, in turn, will support consumer spending. Moreover, the labor market remains strong, despite the weakening of economic activity. Employment grew by 0.3% in the fourth quarter of 2022, and the unemployment rate stayed at its historical low of 6.6% in January 23. Government measures to shield the economy from the impact of high energy prices should be temporary, targeted, and tailored to preserving incentives to consume less energy. As energy prices fall and risks around the energy supply recede, it is important to start rolling back these measures promptly and in a concerted manner. Measures falling short of these principles are likely to drive up medium-term inflation pressures, which would call for a stronger monetary policy response. Moreover, in line with the EU's economic governance framework, and as stated in the European Commission's guidance of March 8, 2023, fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can help reduce price pressures in the medium term. To that end, governments should swiftly implement their investment and structural reform plans under the Next Generation EU programme. The reform of the EU's economic governance framework should be concluded rapidly. Let's look at inflation. Inflation edged down to 8.5% in February. The decline resulted from a renewed sharp drop in energy prices. By contrast, food price inflation increased further to 15%, with the past surge in the cost of energy and of other inputs for food production still feeding through to consumer prices. Moreover, underlying price pressures remain strong. Inflation excluding energy and food increased to 5.6% in February, and other indicators of underlying inflation have also stayed high. Non-energy industrial goods inflation rose to 6.8% in February, mainly reflecting the delayed effects of past supply bottlenecks and high energy prices. Services inflation, which rose to 4.8% in February, is also still being driven by the gradual pass-through of past energy cost increases, pent-up demand from the reopening of the economy, and rising wages. Wage pressures have strengthened on the back of robust labor markets and employees aiming to recoup some of the purchasing power lost owing to high inflation. Moreover, many firms were able to raise their profit margins in sectors faced with constrained supply and resurgent demand. At the same time, most measures of longer-term inflation expectations currently stand at around 2%, although they warrant continued monitoring, especially in light of recent volatility in market-based inflation expectations. Moving to the risk assessment now. Risks to the outlook for economic growth are tilted to the downside. Persistently elevated financial market tensions could tighten broader credit conditions more strongly than expected and dampen confidence. Russia's unjustified war against Ukraine and its people continues to be a significant downside risk to the economy and could again push up the cost of energy and food. There could also be an additional drag on euro area growth if the world economy weakened more sharply than expected. However, companies could adapt more quickly to the challenging international environment, and together with the fading out of the energy shock, this could support higher growth than currently expected. The upside risks to inflation include existing pipeline pressures that could still send retail prices even higher than expected in the near term. Domestic factors, such as a persistent rise in inflation expectations above our target or higher than anticipated increases in wages and profit margins, could drive inflation higher, including over the medium term. Moreover, a stronger than expected economic rebound in China could give a fresh boost to commodity prices and foreign demand. The downside risks to inflation include persistently elevated financial market tensions that could accelerate disinflation. In addition, falling energy prices could translate into reduced pressure from underlying inflation and wages. A weakening of demand, including owing to a stronger deceleration of bank credit or a stronger than projected transmission of monetary policy, would also contribute to lower price pressures than currently anticipated, especially over the medium term. So let's look at financial and market conditions. Market interest rates rose considerably in the weeks following our last meeting, but the increase has strongly reversed over recent days in a context of severe financial market tensions. Bank credit to euro area firms has become more expensive. Credit to firms has weakened further, owing to lower demand and tighter credit supply conditions. Household borrowing has become more expensive as well, especially owing to higher mortgage rates. This rise in borrowing costs and the resultant decline in demand, along with tighter credit standards, have led to a further slowdown in the growth of loans to households. And these weaker loan dynamics, money growth has slowed sharply, driven by its most liquid component. So summing up, inflation is projected to remain too high for too long. Therefore, the Governing Council today decided to increase the three key ECB interest rates by 50 basis points, in line with our determination to ensure the timely return of inflation to our 2% medium-term target. The elevated level of uncertainty reinforces the importance of a data-dependent approach to our policy rate decisions, which will be determined by our assessment of inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are monitoring current market tensions closely and stand ready to respond as necessary to preserve price stability and financial stability in the euro area. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. We now stand ready to take your questions.
Thank you, President Lagarde. And the first question goes to Alex Weber of Bloomberg News. Alex, please.
Thank you. Good afternoon. I was wondering, could you explain a little bit how you see the path for interest rates ahead? I mean, until a few days ago, it seemed pretty clear that interest rates would have to rise further after this meeting, but you didn't give any guidance in the statement. Does this mean it could be that we've already reached the peak in interest rates? And then secondly, regarding the banking sector more broadly, a lot of people have drawn parallels to between what happened at Credit Suisse and Silicon Valley Bank and failures we've seen at the last financial crisis, like Bear Stearns. Do you see any risks that we're on the verge of a systemic crisis, like in 2008?
Thank you very much for your questions. On your first question, I would call your attention to one particular paragraph, which is the first one in our monetary policy statement, in which we are really trying to dissect for you the mechanism of our reaction function. And this is really the best guidance that we can provide. And it is, number one, the assessment of the inflation outlook in light of the incoming economic and financial data. Number two, the dynamics of underlying inflation. And number three, the strength of our monetary policy transmission. So that's brand new. These three components, we never discuss them, we never let them out, and they are clearly identified as the three elements that will be taken into account to determine our reaction function going forward. Second point. If our baseline was to persist when the uncertainty reduces, we know that we have a lot more ground to cover, okay? But it's a big caveat. If our baseline was to persist, as you know, the projection that were decided by staff, sorry, not decided, but determined by staff, are based on data and assessment of the situation with a cutoff date. And that cutoff date was February 15th for the international outlook and technical assumptions, and March 1st for the euro area macroeconomic projections. Now, since March the 1st, a lot obviously has developed. And the projections that we have do not incorporate any of the most recent development, and certainly not the impact of the most recent financial tensions that we have observed on the markets. So there is a level of uncertainty that has been completely elevated as a result of that. And that is the reason why we reinforce the principle of data dependency that we have indicated in the past, with a clear map of the reaction function that we will have in the future. So it is not possible at this point in time, and on the basis of the first component that I have mentioned, which is assessment of the inflation outlook in light of the incoming economic and financial data, it is not possible to determine at this point in time, what the path will be going forward. But we know that it will be data dependent, and we know that if the baseline as we have it was confirmed and was to persist, we would have more ground to cover. On your second point, I will again read for you one more time what is in the second paragraph this time of our monetary policy statement, which is that we are monitoring current market tensions closely. We stand ready to respond as necessary to preserve price stability and financial stability in the euro area. And given the reforms that have taken place, and I was around in 2008, so I have clear recollection of what happened and what we had to do. We did reform the framework. We did agree on Basel III. We did increase the capital ratio. We did increase the financial coverage ratio as well. And I think that the banking sector is currently in a much, much stronger position than where it was back in 2008. Added to which, if it was needed, we do have the tools, we do have the facilities that are available, and we also have a toolbox that has other instruments that we always stand ready to activate if and when needed. And finally, and that's a tribute to our staff, because as you can imagine, we all have worked quite hard in the last few days, and particularly the last few hours. They have demonstrated in the past that they can also exercise creativity in very short order in case it is needed to respond to what would be a liquidity crisis if there was such a thing. But this is not what we are seeing. Thank you.
Thank you, President Lagarde. And the next question goes to, I'm now turning to remote participants, to Balazs Korani of Reuters. Balazs, please, over to you.
Good afternoon, and thank you for taking my questions. President Lagarde, could you unpack for me what you mean a lot more ground to cover?
Sorry, I missed the first part of your
mean?
question. Balazs, can you repeat the first part? I missed it.
Yes. I said, could you please unpack for me your statement that there might be a lot more ground to cover should the baseline prevail? What does that mean? Especially given that prior to this meeting, almost all governing council members, including Philip Lane, has said that more rate hikes will likely be needed beyond March. So are you walking back on that commitment, or is the ECB's inflation fighting stamina waning? Are you giving up on inflation? The second question I have is the usual one, I'm sorry. What other options were being discussed in the meeting today? What were the alternatives that policymakers were supporting?
Thank you for your question. We are not waning on our commitment to fight inflation, and we are determined to return inflation back to 2% target in the medium term. That should not be doubted. The determination is intact, and the path at which we will cover the ground, the pace that we will take, will be entirely data dependent. That's what we have always said. And we are saying on this specific occasion that given the level of uncertainty that has been significantly increased as a result of the most recent financial tensions and developments, given that level of uncertainty, it is better to make the decision that we believe is a robust decision with our 50 basis points increase, and then see what the data tell us and what next assessment we make on the basis of that data. But let me reassure you, we are determined to fight inflation and return it to 2%. And we will take the measures that are necessary. They will be data dependent, and they will function on the basis of these three parameters that I have just mentioned to illustrate what our reaction function is. You had a second question, which you said was a repeat of previous questions, which I think had to do with any other options, what has happened behind those closed doors, and I fully appreciate the question. I have to tell you that the executive board proposed that option, which is described in the monetary policy statement, and that no other option was proposed. I can also tell you that the decision was adopted by a very large majority, with 3 or 4 that did not support the decision, not in its principle, because they were ready to go for that decision, but they were keen to probably give a bit more time to see how the situation unfolds and what additional data we can collect. But otherwise, it was a very large majority decision. And I would say taken in rather record time. Thank you.
Thank you, President Lagarde. I would like to now turn to Kolja Ruzio of the German weekly Die Zeit. Kolja, please.
I would like to ask a question concerning the data-driven decisions. Isn't there a conflict of goals between price stability and financial stability? And to what extent do you consider slowing down the pace of rate hikes because of financial stability? Do you have to slower down perhaps because of financial stability? That is my first question. And the second, were you surprised by the financial problems we see now in the US, and we saw last year in the pension funds in the UK? Was this a surprise, or is it something which was expected perhaps by monetary policy experts?
Well, let me be pretty clear on that point as well. I believe that there is no trade-off between price stability and financial stability. And I think that, if anything, with this decision, we are demonstrating this. We are addressing the price stability issue by raising interest rate by 50 basis points, which is what we had intended. And because inflation is projected to remain way above our target and for too long. And separate from that, we also are monitoring market tensions. We stand ready to provide any kind of additional facilities if needed. We do have extensive facilities, more so, by the way, than the Fed in terms of size of the collateral pools and facilities. And we can do more if necessary. We have demonstrated that in the times of PEP. All the instruments that we decided in the PEP times, whether it is on the pool of collaterals, whether it's on the haircuts, whether it's on all issues, that can be reactivated like that. And we always stand ready to use them again. So, euro liquidity is perfectly addressed. No issue on that front. So there's no trade-off. We have to do our job. This is primary objective, price stability. And as I said, in the identification of the three components that will inform our decision, that will determine our reaction function, you find the word financial. If you look carefully, you have assessment of the inflation outlook in light of the incoming economic and financial data. So the financial issues are captured in order to assess inflation. So there is no trade-off. We have financial stability very much as part of our radar screen and the tools that we can deploy, but there is no trade-off between the two. Did you want to add to that, Vice President?
Well, first of all, good afternoon. Well, from a financial stability standpoint, and the perspective is quite clear. If you look at the industry as a whole, as the President has indicated before, the situation of the European banks, they are resilient. Capital is much higher than it was 10, 15 years ago before the global financial crisis. The liquidity position of the European banks is robust. If you look at the liquidity ratios, on average, they are clearly above the minimum requirements and even the pre-pandemic levels. And even if you look at the composition of these liquidity buffers, they are high quality, very high liquidity assets. So in that respect, the composition is quite positive. And finally, there is something that I think that is relevant. Is the increase in interest rates is positive in terms of the margins of the European banks. And this improvement in terms of profitability more than offsets potential losses in fixed income portfolios. Looking at the exposure, for instance, to Credit Suisse, they are quite limited. And there is no concentration. There is no a single counterparty that concentrates a large part of that exposure. And finally, as the President has indicated, we have a toolkit of instruments just in case that are needed in order to deliver liquidity.
Thank you, Vice President. And now the next question for Martin Arnold of the Financial Times. Martin, please.
Hello, President Lagarde. Could you just explore a bit more this potential for a trade-off between financial stability and price stability? Could you foresee a situation where, given the outlook for inflation, you need to raise rates further, but there's a risk that that could trigger a financial crisis or make a financial stress worse? Second question is that given that you've said the underlying inflation is going to be one of the key factors you look at when deciding, one of the three key factors, does that mean that until you see an easing of most of the indicators of underlying inflation, which you're not seeing at the moment, you won't be able to stop raising rates? Thank you.
Thank you, Martin, for your questions, the two questions. On the first one, as I said earlier, we don't see any trade-off between price stability and financial stability. And we will address each of these two with their respective instrument. For the moment, interest rate for price stability and the set of facilities that we have available, additional lines if necessary, including in other currencies if that is needed in order to address financial stability issues. So they inform each other. I'll come to that in a second, but we handle them separately and there is no trade-off between the two. It's pretty obvious when I say that the inflation outlook will be assessed in light of the incoming economic and financial data, that the financial data, whatever they are, will inform our assessment of inflation. So through that assessment, those financial data, we actually take into account development in the financial markets, financing, financial cost, terms and conditions, and the financing of the economy at large. Your second question had to do, if I recall, with my second. Sorry, wait a minute. I need to get back to my second item. Yeah, because you did refer to the key, but it's the second. The first one that we mentioned is the assessment of inflation outlook in light of economic and financial data, and it needs to be confirmed by the underlying component of inflation. And on that front, we are again going to be data dependent. And it is obvious that as long as we see underlying component of inflation going up, this is not going to stop our fight against inflation. So we will need to receive confirmation on the underlying component of inflation. We will need to receive confirmation that we are heading in the direction of our target of 2%. We are seeing some slight improvement in certain areas, but frankly, not a lot. And we know that whether you look at core, which is one of the components of the underlying inflation, or whether we look at, other dissection of inflation, and in particular, when we look at services, it's not yet heading in the direction that would confirm the inflation outlook that we have.
Thank you, President. And the next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you for the opportunity. Good afternoon. My question
Good
is...
to see you in real life, not on screen.
Thank you. My question is on the mentioning of monetary policy transmission, which comes in your decisions in the three the 3 points that you said about explaining your reaction function. So one of them is the monetary policy transmission. And also at the end of your decisions, you mention that the Governing Council is ready to adapt and adjust your instruments to preserve also the monetary policy transmission. Mm-hmm. So we think about TPI when we hear mm-hmm. about this. Mm-hmm. I'd like to know whether you think that TPI can be used when banking tensions start to jeopardize the transmission of monetary policy. And whether in your fully equipped toolkit, you could also consider to adjust the pace of the reduction of the holdings of securities under the asset purchase program, so the QT.
First of all, on monetary policy transmission, I will be giving a speech soon about monetary policy transmission and about the first leg of monetary policy transmission and the second leg of monetary policy transmission. All I can say at this point in time is that we're beginning to see transmission of our monetary policy through the credit channel. And if you look at rates, if you look at terms and conditions, if you look at the impact that it has on the demand of financing on the part of both corporates and households, we are beginning to see transmission of our monetary policy, which is really, which is what we expected. TPI transmission policy instrument was precisely designed to make sure that monetary policy would travel and move all the way to all members of the 20 member states, to all 20 members of the euro area. And that would be caused by factors that had nothing to do with the fundamentals of an economy or its general macroeconomic policies. We have not yet had to decide whether financial tensions would qualify in that respect, but it could well be the case. I'm advancing a little bit because we did not discuss that at all, and it's something that would need to be debated with the Governing Council. Nor did we decide anything on the partial reinvestment under the APP. That's a principle that we decided back at our February meeting, which has been in place now as of the 1st of March, and that will continue to unfold in a regular and unimpeded fashion.
Thank you, Madame Lagarde. Turning back to our remote participants, I would like now to give the floor to Jean-Philippe Lacour of Agence France-Presse, AFP. Jean-Philippe, please.
Yes, now you can hear me and see me, I hope. Okay, good afternoon, Madame la Présidente. One question on these underlying components of inflation you mentioned. Do you put the significant contribution of profit margins into these components? Because the profit margin seems to develop well, and that could maybe put some questions on the narrative of the ECB, very focused on the risk, either on the wage price loop. And I would like to hear what you think about this contribution of corporate profits to inflation. And a second question, if I may, Mr. Guindos, you are quoted that some banks may be vulnerable. You would have told this to ministers briefed earlier this week. I don't hear this today in your statement. Maybe you can precise or confirm or not what has been reported. Thank you.
Thank you very much for your two questions. And I just want to go back to the statement. I just want to find the right sentence where for the first time, actually, we talk about margins. And it is, must be in the inflation sections. Anyway, I'm not going to waste your time trying to find the sentence in which we, oh, here it is. So moreover, many firms were able to raise their profit margins in sectors faced with constrained supply and resurgent demand. So we mention it very specifically. It is part of the analysis that we conduct. As has been mentioned by some of you who are following us very carefully, we had a retreat of all the governors of the Governing Council to discuss in depth various matters, one of which was actually the various components that fuel underlying inflation. And we did have some assessment of the increase in margins by the corporates, which played a role. I'd like to say one thing, because there has also been reference to the fact that I would have mentioned the word wages X times during my last press conference. I think what we hope for is a proper burden sharing of what really is a quasi-tax. This cost push shock has been operating a bit like a tax, at least in portion of its form, and that this tax should be shared because there has to be some burden sharing. What we are concerned about is whatever the burden sharing, if that was to spiral into the second round effect that we don't want to see, frankly. But this burden sharing aspect is something that needs to be debated at society level, at corporate level, and it's certainly something that we would welcome to the extent that it reduces the risk of second round effect in particular. On the other question that you asked pointedly, I also want to point to you the sentence which is in the second paragraph of the monetary policy statement. And as you know, the first paragraphs matter. And in there, we say the euro area banking sector is resilient with strong capital and liquidity positions. And we stand by that statement strongly. But I will let you, Vice President, comment on this wonderful leak.
As you can imagine, I remember what I told the ministers, and is almost identical to what I have just told you. So that the banks are resilient, high capital ratios, robust liquidity buffers, high quality of the main components of the liquidity buffer, limited exposure to the institutions of the US in that case, because it was last Tuesday of the US, and simultaneously that the overall assessment was quite clear. So that the banking industry in Europe is resilient.
Thank you, Vice President, Madam President. Next question goes to Andres Stumpf of Expansion. Andres, please.
Good afternoon, Madam President. When you talk about creativity of the staff, do you think that if needed, the ECB could come up with a tool like the one presented by the Federal Reserve, accepting bonds like at par instead of market value, or would it face legal constraints? And I have a second question, if I may. You have visited Spain recently, and I'm sure you are aware that there's a concern about the low remuneration on deposits there. Banks say that this is because they have plenty of liquidity from the ECB. So I was wondering if you think that the low deposits are going to continue until TLTROs mature, or it is something different and you are not in the same point as the banks. Thank you.
Well, thank you. Thank you for your two questions. So when I say that I have full confidence in staff creativity, what I mean is that I have seen them in action. They've been there, they've done it. And on the occasion of COVID, for instance, they were able in very short order to put together programs that proved extremely efficient in order to resist the downside effect of the crisis. So those tools exist. They are strong, they are powerful, and they can be reactivated anytime. We always stand ready to do that. Added to which the facilities that we have currently are probably broader and more accessible than the ones that pre-existed at the Fed. So I don't see the need at this point in time to explore any alternatives to the tools that we have, because I think that they function. If it was needed at some point in time, of course, I know staff will stand up to the occasion and will also look at what can be done within our mandate and in accordance with the rules of the treaty under which we are governed. On the issue of remuneration of deposits, I have spoken my mind on Spanish television, and I have observed that in quite a few countries now, the DFR is taken into account in order to determine the rate at which deposits are remunerated, either deposit at sight or term deposits. And that obviously this is something that needs to be debated between the clients and their banks. But I observe that there are quite a few countries where banks actually do that, and competition between them is facilitating that process.
Thank you, Madam Lagarde. The next question goes to Eshe Nelson of the New York Times. Eshe, please.
Hi, good afternoon.
Good afternoon.
You I would like to go back to this point about the incoming economic and financial data. I mean, in the past meetings, we've heard a lot about what the economic data is, the underlying inflation data. Could you detail a little more what the financial data is that you'll be watching? And is there a new emphasis on this data, or has it always kind of been there? And then my second question is, how much has the volatility we've seen in bank stocks recently as the meeting was happening affected today's decision? Not necessarily the interest rate decision, but the choice to not kind of lay the path ahead more clearly. Thank you.
I like your last word, clearly. This is something that we are longing for, clarity. Because obviously we work on the basis of data, of observations, of facts. And there is currently, for the reasons that I have mentioned in my monetary policy statement, a degree of uncertainty that pre-existed, but that has certainly been amplified by the most recent financial tensions that we have observed in the last few days. So that has, it's obviously difficult for a group of 26 members of the Governing Council to come to a decision in the face of projection and the first of the three elements that I have mentioned to determine our reaction function, to come up to a decision. But we were certainly confident that this 50 basis points rate increase was a robust decision, considering the ground that needs to be covered. What financial data do we look at? We are particularly concerned, obviously, about our monetary policy transmission. So we look very carefully using various analytical tools. We look at credit to corporates, credit to households, terms and conditions, restrictions eventually, if they were to be observed, to assess whether the financial conditions are tightening and what impact this tightening of financial conditions will then have on the economy. Those are the key components that we assess to determine our monetary policy transmission.
Thank you, President. And the next question, going back to our remote participant, goes to Tom Fairless of the Wall Street Journal. Tom, please. Tom, can you hear us? This does not seem to be the case. Then I would give the next question to Eric Albert of Le Monde, also connected via video call. Eric, please.
Good afternoon. Thank you very much for taking the question. There's been a lot of parallels done with 2008. Obviously, the banks are in different circumstances, but in July 2008, the ECB increased an interest rate, did an interest rate hike just 2 months before the biggest financial crash in recent history. Is the ECB at risk of doing the same mistake? First thing. And the second question is about the transmission of monetary policy. It takes a long time for interest rate hikes to go through the economy. Given the uncertainty, isn't there a case for at least slowing down? You said you were data dependent, but isn't there a case now to slow down in the next few meetings?
Thank you very much for your two questions. As you said yourself, the banks are in a completely different position from 2008. And, crises are never exactly the same anyway. But the architecture of our banking system, the framework within which they operate, the supervision that is applied to the banking system have been all considerably improved. So obviously we're mindful of our history and what has been done in the past, but we are all confident that the decision that we made today is a robust decision, was called for, was needed, and we have, as you have noticed, I'm sure, indicated very precisely that as to the future, we would be data dependent. And that, I think, is predicated on the fact that we need to have a better assessment once the financial tensions on the markets abate in the future. On your second question, we are seeing we're beginning to see a good transmission of our monetary policy in the credit sector, as I have mentioned earlier on. I think we have seen a reduction of several basis points, 20 to 16 basis points, depending on whether you look at corporates or households, increase in the credit rates that are offered, and a significant tightening on the part of the banks that are probably assessing and reassessing the risks that they're taking. So this is, in our view, the beginning of an indication of good transmission of monetary policy. This is not the end of it. As you said, it takes a longer time. It seems to have transmitted rather rapidly, if you consider that we decided to normalize our monetary policy back in December a year ago, so it's a little over a year ago, and we are certainly beginning to see in the credit segment the impact of our decisions. Are we seeing dampening demand? That remains to be seen, and how much more does it need to be dampened in order to meet the objectives that we have, which is 2% medium-term target, to be seen. We are data dependent. We're going to really look at the uncertainty fading out, hopefully, and what projections we will be able to operate upon, as well as what assessment we can make at our next policy meetings in May, June, and subsequently.
Thank you, Madame Lagarde. Let's try again with Tom Fairless of the Wall Street Journal. Tom, can you connect?
Hi, can you hear me?
Yes.
Okay. So thanks so much for taking my question. I suppose the first question is, we've started to see these signs of weakness in financial markets, and you haven't taken that as a reason to pause. But is there, do you think, a message in what's happening? It's something that we haven't seen for a while, and that has reminiscent, it kind of brings back memories of maybe to the financial crisis, as other people have said. I mean, is just the unusualness of this a reason to kind of think twice about future rate increases? Do you think, with this phrase that we hear, raise rates until something breaks? And my second question was related, that at the moment so the bank failures were in the US. Do you think this is more of a US specific issue? Do you think there's something fundamentally different about Europe that means European banks are less vulnerable, or maybe the level of your policy rate means they're less vulnerable? Thank you.
Thank you very much for your two questions. On the first question, I would like to just reiterate our confidence in our banking sector. As I said earlier on, it's a banking sector that is resilient, that has strong capital and liquidity positions. And we are monitoring the particular situation, and we are monitoring the market tensions, and we stand ready to respond with all the tools that we have that can be switched on, and by any tools that would need to be applied to the situation depending on the circumstances. So it's not business as usual, but we believe that the decision that we have taken is robust, is completely justified by the circumstances, and informed by our current analysis. Is it a US specific problem? We are all governed by, the banking sector is governed by Basel III, and banks operate within the framework of Basel III. As you know, there have been multiple discussions and disagreement as to who applies Basel III better than the other. But I would simply observe, because comparisons are pretty odious, that in Europe, we have strong supervision, we have strong capital, and we have solid liquidity positions. And as the Vice President said, exposures are not concentrated. And based on the work that has been conducted by the SSM, we don't have similar occurrence as the one that occurred in California, for instance. But maybe, Vice President, you want to add to that?
Well, perhaps, the only thing to add is that the business model of the Silicon Valley Bank was quite unique. And that it was, there was a mismatch between the assets and the liabilities that, you know, it made this bank vulnerable, and this has been indicated by the American authorities, to any important change in interest rates.
Thank you, Vice President. And the last question today goes to Leonidas Exousidis of Handelsblatt. Leonidas, please.
Thank you. Good afternoon. I have a question concerning the excess of liquidity and the ECB balance sheet. Did you discuss about an increase in the level of reduction? And if yes, when could this increase start? Thank you.
Thank you so much. You give me a chance to be very brief in my response. No, we did not discuss. We had plenty to discuss today, and we did not discuss that particular one. Thank you so much.
This concludes our press conference.
All right, guys. So that is it for today. Let me know what you think. The market is pumping up. Look at the market right now. Hey, you got to love it. You got to love it. Hey, one thing I said, and I think it's very true on Twitter, and I'm going to read this again just because I think people need to hear this. Okay. I think people genuinely need to hear and you can follow me on Twitter at Beginner Trades. All right. But what I said was that the biggest lesson everyone should understand. I hear bears all the time saying, aha, you know, the market's going to crash, sell, sell. I hear bulls say the market's going to run, buy, buy. The big thing to understand is that the market is contrarian. Okay, extension plays a huge factor in everything, both short and long term. And so when everybody yells fire after the dip, I buy it up. Okay, when everybody's saying bull run, yelling bull run, I'm usually selling my positions. When we're breaking highs, I'm taking profit. When we're dipping down, I'm buying dips. That is the single most effective swing trading strategy, in my opinion. It's one of the things that you have to understand. Don't get wrapped up in sensationalized markets, okay? And I think it's really easy to sensationalize things because I think sensations bring in clicks on the internet. But what I think is really important to understand is that ranges, stocks move in trends and ranges. Extension plays a huge factor on everything. It's just really important for people to really understand about the stock market and the markets in general. Myth, if you troll anymore, I'm going to ban you, bro. You know, just a heads up. You're starting to sound kind of toxic, dude. What I will say is that regardless of what I am today, I'm green on the year. You know, I've been wildly successful with my swing trades. At least, I would say at least 65 to 70% accurate on my swing trades, at least. And my wins are probably bigger than my losses in that regard as well. And so again, you can be short biased. It's fine. Just don't be toxic. Anyways, with that said, though, guys, y'all want to check out a funded account program. One of our sponsors is Top Step. Check them out. Great way to help support the channel. Easiest way to get exposure to markets without taking on a lot of risk. And so, yeah, easiest way to, if you want to test your skill without taking on a lot of risk, most day traders lose money. If you want to test your skill, check out Top Step. Top Step is the easiest way to trade. There's the link. Also, I've been green and just to put this into perspective, because Myth is trying to make fun of me for losing. This is the only losing day so far I've had this entire month. I am the only, this is the only losing day I've had this entire month. Just to put it into perspective. All right. As well as part of last month as well. So regardless of what I am today, which was really mostly a mistake, a glitch in my platform. If you guys actually watched the trading this morning, it was mostly a glitch. This is the only losing day I've had this month. You know, and so again, while the glitch kind of caused this little pullback in my P&L, you can look at the last month's graph as well and see what that looks like, you know. And so again, you can see my profit factor is about 2.5 to 1, you know, wildly green. Disney, I am green in my stock trades Myth. And if you weren't being toxic and I misinterpreted your comment, you know, my bad, but it seems a little toxic, bro. Just a heads up. But yeah, I'm green on Disney. I'm green on my Exxon trade. I did buy those dips. And so, yeah, we'll see what we get. But yeah, like I said, if you want to test yourself, check out Top Step. Easiest way to test your skill without taking on a lot of risk. Link is in the description as well as in chat. You can also check out Chart Prime. Let me show you guys Chart Prime one more time here. And again, we try to keep all the plugs to the very end. We don't really plug anything in the beginning of the stream. But what did you think about the ECB conference? I mean, the market is just flying up over the Q&A section. I get there's a lot of bullish sentiment coming through. With all this stuff. And so it's really interesting to kind of see what happens here with regards to the market as a whole. Another thing is the market just broke highs again here, man. Look at this, just pumping up right now, man. Wow. Look at this huge pump in the market, just breaking highs again. Again, it's dragging my Disney trade green. It's dragging my Google trade green. But again, check out the accuracy of Chart Prime today. I just got to give them a little bit of credit. Again, they're a sponsor of mine, so I'm certainly biased, but look at the accuracy here. with this. Again, they're sponsors, so I'm biased, but like, look, reversal up right here, reversal up signal, bounce, reversal down signal, drop, reversal up signal, bounce, reversal down signal, literally at the very top here, literally at the very top, drop, reversal down signal, literally at the next top, like 15 minutes later, you get another top, reversal signal, literally right at the top, bullish engulfing candle, literally at the bottom, multiple engulfing candles, nice little bounce. And so again, I can't fake that. If you want to check them out, check out the link in the description. It's like $35 a month. Good luck. You could use it in stocks, crypto, forex, futures. Good luck. Love you all. Y'all be safe. I'll see you guys tomorrow. Back early tomorrow. Tomorrow is quad witching day, I believe. Hey, bro, real quick. So I got to run. But yeah, real quick, can you clarify what you mean by extension is very important? So understanding extension is important. And so the easiest example I use on a regular basis is like, okay, you see a blue chip stock gapping up 20%, right? Say you see a blue chip gapping up 20%. What do you think when you see that blue chip stock gapping up 20%? Do you think, oh man, this thing must be super strong, I need to buy it up? If you feel that way, you are almost certainly wrong. And that's actually the opposite of what you should be thinking, in my opinion. Real traders understand. You see a blue chip gapping up 15, 20%. I'm looking to sell. I'm taking profit. I'm getting out of that thing. That thing's extended on the upside. It's probably going to correct back down. Gap fills are real. Gap fills are a real thing because of this, right? Same thing on the bottom. Amazon had mixed earnings, dropped 20%, 3 months ago. When it did that, I bought up some shares, made like the Amazon ended up bouncing back like 15% in like a week. Because again, you got to understand extension. You got to understand trading is a psychological game. And so like if something's gapping up 20%, what's the most likely outcome of that is that people are going to start taking profit. They're going to start selling. Why? Because they're up 20%. They're going to start unloading shares because they're up so much. Same thing on the bottom side. When shorts cover, they have to buy it back, right? So if you got a lot of people shorting something and it drops 20%, one thing is like dip buyers like me are going to step in and you're going to get an influx of buys. You're also going to have short position traders covering their position, buying it back. That's going to bump it up as well, right? So extension's a real thing, and if you listen to traders and only traders, you're not going to really understand what I'm talking about because people are really sensationalized. They talk about, fire. When everybody yells fire, I buy stuff up. When everybody yells bull run, I sell things. And it works really, really well. I'm very accurate with my swing trades in that regard. And I do it in day trading to a certain extent as well, but it's mostly meant for like swing trading and investing. But yeah, good luck, guys. Love you all. I'll be back tomorrow morning, bright and early. Have a good day, guys. If you want to check out our sponsors, check out the link in the description. I appreciate the love and support very much. Y'all have a good day. Market is flying up right now. My Exxon trade is green. My Disney trade is green. You love to see it. So yeah, good luck. I'll see you guys tomorrow.